Namaste, good morning. Yesterday, we were looking into section 37, the expenses expressly a general deductions based upon some conditions. When you are standing up, you should be careful. They're based upon some conditions. The conditions are the expenses should not be covered under 30 to 36. Why that is the condition? Because 35 allows capital expenditure. 35 AD, section 35, agriculture extension program, skill development program, capital expenditure. So, if it is not covered under 30 to 36, come here. Should not be capital, should not be personal, should be incurred during the previous year, incurred for the purpose of business or profession. Okay, incurred for the purpose of business or profession. And also we studied something, okay, about the specific aspects of disallowance, penalty, CSR expenditure, and political contribution, including advertisement in the brochures or publications of political parties. Of course, if you are in the old tax regime, 80 GGB or GGC, even advertisement will be considered as a donation. You can claim that. Am I clear to you? Okay. Followed by this is the discussion on case laws pertaining to section 37. The case laws pertaining to section 37. The case laws are only on, major case laws are only on two things. Is it a penalty and is it a capital expenditure? Almost all the major case laws are coming under whether it is a penalty or whether it is a capital expenditure. Okay. Case laws of section 37 falls under two categories, whether major case laws, not all, whether it is a penalty, whether it is a capital expenditure or revenue expenditure. Okay, first let me focus on penalty related case laws. Let me focus on penalty related case laws. Cap scan. Okay, cap scan. And diagnostic center. Cap scan and diagnostic center. Cap scan and diagnostic center. Referral fee paid to medical practitioner is not allowed as deduction. Referral fee paid to medical practitioner, doctors, are not allowed as deduction. Referral fee paid to doctors are not allowed as deduction. Okay, am I clear to you? Okay, CapScan Limited, the CapScan and Diagnostic Center case law, referral fee will never be considered as an expenditure. Will never be considered as an expenditure. And then the two case law is said, Confederation of Indian Pharmaceutical companies, and also Apex Laboratories. Where an expenses is prohibited for the receiver, the same will not be allowed. The same will not be allowed for the payer or provider. The same will not be allowed for the payer or the provider. Where an expenditure is specifically, expressly, there is a code of ethic which the receiver should not. The payer paying it also will tantamount to, will be equivalent to, okay, unethical payment. Okay. Third, Neelavati and others. Neelavati and others. Friends, they made some payments to police personnel and gundas. They made some payment to police personnel and gundas so that they don't disturb their, the gundas don't disturb their business, and the police personnel give protection. Is it allowed? Means the court said no. It is still a nature of illegal payment. It takes the character of bribe. It will not be allowed. It will not be allowed. Okay. Payment opposed to public policy or not allowed. Payment opposed to public policy or not allowed. Millennia developers. Millennia developers. Millennia developers. My dear friends, they are allowed to construct, let us take for example, they are allowed to construct 10 floors. They constructed 12 floors. They constructed 12 floors. For the 2 additional floors, they paid regularization fee. They paid for the 2 additional floors, they paid something known as regularization fee. Is it allowed? Means no. Is it allowed? Means no. Regularization fee is like a penalty. You violated the norm. That's why you are paying it. Just because it is known as a regularization fee, it is not allowed. Regularization fee is not allowed as deduction. Regularization fee is not allowed as deduction. Okay. Regularization fee is not allowed as deduction. Am I clear to you? Am I clear to you? Okay. Whether it is a capital expenditure or revenue expenditure. Oriental ceramics. Oriental ceramics. Okay, Oriental ceramics. Glow sign board. Is a revenue expenditure. Glow sign board that is installed is a revenue expenditure. You need not capitalize it. Suppose the question says that 2 lakhs is incurred on a glow sign board which has been capitalized, on which 15% depreciation has been claimed. You should add back that 15% depreciation which they have charged, reduce the entire 2 lakhs. Reduce the entire 2 lakhs. Remember, glow sign boards are not capital expenditure. It is a revenue expenditure. Priya Village Roadshow. Priya Village Roadshow. Nothing but PVR. PVR is known as Priya Village Roadshow. PVR went in for a feasibility study of new audio system in their theatres. They went in for a feasibility study of a new audio system in their theatres. Unfortunately, it failed and they have to drop the project. Is it a revenue expenditure or capital expenditure? The court held that this is a revenue expenditure. The court held it as a revenue expenditure. Remember what I am saying. Where expenditure is incurred for an existing business, feasibility study expenditure are incurred for an existing business which has been dropped without creating an asset. Which has been dropped without creating an asset, then such expenditure shall be treated as revenue expenditure. The key word there is the front word also, for an existing business. In CMA final, twice the question was for a new business. A feasibility study incurred for a new line of activity. That is not allowed. That is anyhow expansion, preliminary expenses, it will go there. It should be for an existing business. Okay. Where feasibility study is incurred for an existing business, and the same is shelved without creating asset, then it can be claimed as revenue expenses. Where feasibility study is incurred for an existing business. Where feasibility study is incurred for an existing business and the same is shelved, dropped without creating asset, then it can be claimed as an revenue expenditure.
ஏவோ வந்து இப்ப ஏதோ சார் கேபிட்டலைஸ் பண்ணணும்னு சார் ஏதோ
The AO never said it should be capitalized. The AO said it should be not allowed as deduction because there is no matching concept of income and expenditure. But the lawmakers, but the argument was, even though there is no matching concept, and then the argument was whether it is capital or revenue, they came to the expenditure of revenue nature. ITC Limited. Okay. ITC Limited. Okay. Issue expenses of debentures. Issue expenses of debentures are considered revenue in nature. Issue expenses of debentures are considered revenue in nature. My dear friends, share issue expenditure goes to preliminary expenses. Share issue expenses, and it should be amortized over the period. Suppose I issue a 5-year convertible debenture, 10-year convertible debenture, and incur expenditure. The court said there is no specific provision to take it as an amortization. It is incurred, so it cannot be called as a fictitious expenditure. It is very much incurred, and there is no specific amortization provision. Share issue is clear, amortization provision is there. So the court took a stand that it can be claimed as a revenue expenditure. It can be claimed as a revenue expenditure. Mahale, Anand, Filters. Mahale Systems Limited, Systems Private Limited. Anand Filters Systems Private Limited. My dear friends, just understand what I am saying. I sell goods. I'm not getting back the money. It is treated as balance. I gave a rental advance. At the time of vacating the property, the owner is not paying me the money. Very good answer. It is a capital loss. It cannot be treated as an expenditure. It cannot be treated as an expenditure. Friends, to consider it as bad debts, first, it should have been recorded as income. To consider it as a bad debt, first it should have been recorded as income. Then only it takes the character of bad debt. Here, security deposit given or rental advance given is not considered as income. So the foregoing or write-off of the same shall not be considered as revenue expenditure. It should be capital expenditure. Okay. Okay, the law says, the court judgment says, it is evident that the character of the amount was a capital nature and remains so even. Okay, so security deposit foregone. it takes the nature of capital loss. It takes the nature of capital loss, so it will not be allowed. It will not be allowed, my dear friends. Am I clear? Okay. Infosys Limited. Friends, very popular case law adjustment in our question papers very often. Okay, you all, I need not tell you about Bangalore. Okay, right. To cross the street for Infosys employees, it took half an hour. Okay, and there the speed of that road was, there was safety concerns. So Infosys Limited installed a signal in front of their office, traffic signal. Remember, they cannot operate it. They have to give it to the government. They have to give it to the government. So asset is not owned by me. But did I do it as a CSR? No. Then I would have done it elsewhere. The purpose of doing this expenditure is my employees has to safely cross and come to this side of the road. The purpose of this expenditure is for my employees. The question is, can this be claimed as staff welfare? Capital expenditure. If it is capital expenditure, you are saying, then the asset should be owned by me. You are right. If the asset is owned by me, it is a capital expenditure.
Beneficial.
No, I'm not the beneficial owner, sir. Government is the owner, sir. I cannot use the asset after that. In no way I can have that. Huh? Then revenue. Okay. Yes. The court said it is allowed. Any expenditure where the asset cannot be owned by the organization, but directly or indirectly benefits the employee, it is treated as an employee welfare expenditure. Remember this case law. Many questions we are going to answer. The company purchased and donated a bus to a school where the children of the employees are studying. The bus is not owned by the company. It is, once it is given to the school, it is owned by the school. But it is allowed because it is not given to any other school. It is given to a school specifically where the children of the employees are studying. We know TI cycles. Majority of the TI employees' children are studying in that SBOA school. Okay, the primary preferences for the people of State Bank of India, workers of State Bank of India, like that it goes on. Am I clear to you? Infosys Limited, where the expenses are incurred on asset which is not / cannot be owned by the company but directly or indirectly benefits employee okay, it is considered as revenue expenses. Okay, asset is not owned by the organization, but it directly or indirectly benefits the employee. It is treated as. Am I clear to you? Am I clear to you?
Yes.
Okay. Okay. Right, friends. Friends, I continue here. I continue here. Okay.
Anything which gives some benefit and we have control over it.
So it is not, that's what I accept with you. Those are all the conditions owned by the assessee, used for the purpose of business. All these things are not there, but I have incurred it. And the purpose of me incurring is not of CSR nature. It is very clearly for the benefit of my employees. Then it will be allowed as a staff welfare, employee welfare expenditure. If it is given as CSR, it will be considered as donation. That's what. I should not put it in that 135 as CSR. Okay. Friends, TVS Motors. Friends, TVS Motors. Very important case law again. See, I buy this building or I construct this building and paint it. Is it capital or revenue expenditure?
And
Sir, I construct this building, purchase this building and paint it. Capital.
building is a capital.
After 2 years, I'm again painting it. Revenue. Remember, irrespective of the expenditure, this is the concept. Replacement does not bring a new asset into existence, so it should be treated as revenue expenditure. Replacement does not bring a new asset into existence. TVS Motors case law. Okay. Tools, dies, mold. First time when they are making the mold, it is a capital expenditure. Subsequently, they are replacing it with something. It cannot be treated as capital expenditure. In a famous case law, the hotel had a carpet. The hotel had a carpet and they replaced that carpet. They did not buy a new carpet. They replaced it, the carpet. Considered as revenue expenditure. Considered as revenue expenditure. Unfortunately, in our income tax law, unless the old carpet gets a value, it cannot be taken out of the block also. It cannot be taken out of the block also. So, in this case,
beneficial to the assessee.
Sir, beneficial to the assessee, yes, sir. Replacement does not bring a new asset into existence. Hence, revenue expenses. Remember, replacement does not bring a new asset into existence. Hence, revenue expenditure. Honda Seal is the next case. Just want to ensure that Honda Seal Cars India Limited. This also, even the current examination, this came. Friends, I am entering. Honda SIEL, Seal Cars India Limited. Friends, I am entering into a joint venture agreement for which I am making a payment. Even I'll tell you the examination questions. Purchased a license. I am purchasing Microsoft license, Microsoft 365 license. Is it a revenue or capital expenditure? Okay. Every year I am subscribing. It's 1 year subscription. Louder, sir. I am purchasing for 10 years. The period determines, the period of usage determines whether it is revenue or capital. Where a limited right is obtained for a limited period, then it shall be incurred as revenue expenditure. However, in this case, for setting up of a new business, it includes very many aspects of commencing, specifies termination, and hence it is treated as capital expenditure. Where benefit of an expenditure where benefit of an expenditure is enduring in nature, that is long term, then such expenditure should be capitalized. Every agreement will have a termination clause. That doesn't mean I'm going to terminate. So that is not the key factor. Then it should be capitalized. Is the class understanding? Okay. Wipro Finance.
License will be considered as an intangible.
Intangible asset. Very good, sir. Intangible asset 25%. Yes, sir. The intangible asset explanation goes like know-how, patent, trademark, copyright, and any business or commercial right. So license is a commercial right to do certain things, etc. It is a revenue, sir. Even if it is 1-2 years also, they will hear the agreement. Every agreement will have termination clause, sir. At the end of it, it will be terminated. At the either of it, if they are non-fulfillment, it will be that cannot be the reason for saying it is a revenue expenditure, because so in our material it will be in page number 29, in 29, so it should be 28 for you. Okay, friends. You're using this DTE batch material. Yeah. Friends, now I want you to understand what is Wipro Finance case. Coming back, what is 43A? What is 43A? Exchange rate fluctuation should be capitalized with the cost of the asset, even if it is hedging contract. Okay. Wipro Finance provides finance. If she is going to purchase an asset, I provide the finance for it. I'm not a lessor. I'm not a ICDS. I'm just a HP. I provide a financial lease. Okay. I provide finance for her. For providing finance, I got a foreign loan. For providing finance, for doing my business, I obtained a loan in foreign currency. When I repaid, the currency rate fluctuated. The department said, capitalize it under 43A. The department said, you are funding for assets. You are funding for assets. So you should capitalize it and not treat it as revenue. Is the department correct? No. I am doing business. I am not, my business is funding assets. My business is funding assets. But as such, I am not doing anything else but doing business. The loan is obtained for carrying on my business and not for any other requirement. So the court also agreed with Wipro's argument that it should be treated as revenue expenditure. It should be treated as revenue expenditure. Assessee has not borrowed for the purpose of acquiring the asset, but only for financing the asset. It is more of operation than acquisition. Okay, so it should be adjusted. Okay, okay, it is not a case of adjusting against the cost. Okay, please write it. Okay, sorry, I don't have space. Please write it. Okay. Any forex fluctuation for the purpose of conducting the business which is financing the asset. Any forex fluctuation for the purpose of conducting business which is financing the asset shall be treated as revenue expenditure. What is my business which is financing the asset, comma, shall be treated as revenue expenditure and not capital. Okay, and not adjusted with COA. Am I clear to you? Okay, sir. Remember, there are at least 8 case laws pertaining to capital versus revenue and penalties. Penalties, these two are the important parts of case law. Okay, okay. Other case laws. Other case laws.
Class sir. Where is question of 40?
Well, there is no question of 43. I accept it. There is no question of 43. Books, there is no asset. I accept it. Okay. The question is, it should not be allowed as a revenue expenditure, but which is not correct. Okay. Other case laws, my dear friends. Berger Paints. Berger Paints Limited, section 35D, that is relating to preliminary expenses. That is relating to preliminary expenses. Securities premium. Securities premium is also part of capital employed. Of course, it's an accountancy concept, always financial management concept. Securities premium should also be considered because we take 5% of cost of project or capital employed. Capital employed includes securities premium also, is also part of capital employed. Are you understanding? Yeah. Now, friends, I am a 35 AD company, specified business. So for specified business, I need to get the approval. I presented the application. Okay, let us take that. I started incurring the expenditure from 1st of April towards a specified business. Let us take it as construction of hotel. I applied for approval. I got the approval on 1st of July and then continued the expenditure and claimed it in the next financial year, because next financial only I complete. The income tax assessing officer said expenditure incurred on or after 1st July will be allowed. Expenditure incurred in the period of 1st April to 30th June, I will not allow. Because you got the approval. I accept past period expenditures can be accumulated and claimed in the first year of operation. I accept that. But it is only after you getting the approval, any expenditure which is incurred before getting the approval is not allowed, is the contention of assessing officer. Court took a assessee favorable stand. No, substance over form. Approval is a formality. Approval is a formality. It's a legal step. But he has incurred expenditure. Is the expenditure genuine? Yes. Has he incurred it? Yes. Just because the approval has been obtained late, he has presented the application on 1/4. The approval will take its own time. Just because the approval got late, it does not mean he cannot claim those expenditures. C. Bros Limited. Okay, it is under section 35 AD. Any expenditure before obtaining approval can also be accumulated and claimed in the first year of operation. Any expenditure before getting approval can also be accumulated and claimed in the first year of operation. National Cooperative Development, National Cooperative Development Corporation. National Cooperative Development Corporation. Friends, to make a business expenditure, it should be a business income. Is the concept correct? To make a business expenditure, it should be a business income. Not correct. It can be any source. Is it a business? I might have even obtained loan. Suppose I have an agricultural operation which is not taxable, but from that income I am making some business expenditure. Okay, source of income is irrelevant. If it is a business expenditure incurred in normal course, it is allowed. If it is a business expenditure incurred in the normal course, it is allowed. CEE. May I? May I? My dear friends, these case laws plus the subsequent discussion which we are going to have, minimum 2 adjustments to maximum 4 adjustments are going to come from this. Never miss this. Never miss this. Not only the case laws and the discussions we are going to have now. Never miss it. Okay. The 4 pages which I am going to say is going to carry 4 adjustments in our question, which I will prove you as the class goes by. Now, coming to some discussion. My dear friends, expenditure on rights issue is not allowed, whereas expenditure on bonus issue is allowed. Why? The lawmakers have given an interpretation. Rights issue increases the capital base. You get new funds. Whereas bonus issue, from general reserve, it is becoming share capital. That's all. It does not increase the capital base of the company. So expenditure on rights issue is not allowed, whereas expenditure on bonus issue is allowed. Clear? Clear? Interest on loan taken for paying dividend allowed. Interest on loan taken for paying income tax not allowed. Once more, interest on loan taken for paying dividend allowed. Interest on loan taken for paying income tax. Why are you taking a loan? Because you feel if you don't pay the tax, that interest will accumulate. To avoid that interest, you are paying this interest. So the lawmakers have said, this interest takes the character of interest on income tax. So not allowed. Okay, so not allowed. My dear friends, very important points which I am very sure you will remember also, which will make us crack the question paper easily. What is penalty? Violation of law. Is it allowed or disallowed? Whereas interest is allowed. Remember, even in income tax law, interest is not allowed. I will tell you why. Even in income tax law, interest is under 234A, B, C, D, E. Penalty is under 271. So, on a broader scale, we understand interest is paid for smaller errors of non-payment, not filing within due date, whereas penalty is for a bigger error, bigger mistakes. So, the law has said interest is intra-virus, penalty is ultra-virus. So remember, interest is allowed, penalty is not allowed. Sir, is interest on income tax allowed? No, I'll come to that section. That is section 40, which there is a specific disallowance. But generally, interest and penalty are not in the same balance. Penalty is violation of law, so it will be allowed. Am I clear to you? Am I clear to you? Like this. Secret commission. What is secret commission? Where the name of the receiver is not mentioned. Where the name of the receiver is not mentioned, it is known as a secret commission. Not allowed. The law says it takes the character of bribe. It takes the character of bribe. Are you understanding? Are you understanding? Director's son is sponsored by the company. Director's son is sponsored by the company for higher education. Entering into an agreement with the son that after his education, he should serve the company for 5 years. Is it allowed? Court asked back a question. Is it your regular scheme? Is the children of all employees eligible for the scheme? And one of the beneficiary is director's son? Allowed. No problem. If director's son, remember this word, if director's son is the only or first beneficiary. Sir, yesterday only I framed this scheme. Okay. If director's son is the only or the first beneficiary, boss, it will not be allowed. XJ forgings is the case. I'll help you out. XJ forgings is the case. VRS compensation, is it allowed? In 5 equal installment, it needs to be claimed. It is an amortization item. In 5 equal installments, it needs to be claimed. Retrenchment compensation. That is, you are terminating an employee. You are sending him out an employee. At that time, you pay something known as retrenchment. Retrenchment is a glorified terminology. Dismissed, sent out, layoff. Okay, these looks very insulting. Okay, we are all chartered accountants, we are all commerce professionals, etc. We always glorify terminology. We will not go and tell somebody that we got a loan, so they will look me down. And instead, I am providing you an opportunity to give me loan. How to say this? I issue debentures. What is debenture? Acknowledgement of a debt is debenture, my dear friends. I am providing you opportunity to give me loan. I am issuing debentures. If you want, give me loan. See, such a glorify, we will go to such extent to glorify ourselves. Coming back, retrenchment is sent out. So somebody comes and tells you that they are retrenched, you don't say congratulations, you deserve it. Okay, so retrenchment is a retrenchment compensation is allowed. That need not be amortized. That need not be amortized. My dear friends, as I told you, if you are using the electronic material, okay, page number 54 onwards, okay, page number 54 onwards, okay, till page number 58, 54 to 58 are very, very important, my dear friends, are very, very important if you are using the physical material. It will be slightly different page number, one down it will be. Okay, one down. Now I am requesting you to go to page number 56 or 57. Bonus issue allowed, rights issue not allowed, interest on payment loan taken for income tax not allowed, whereas interest on loan taken for dividend allowed. Payment for breach of contract allowed. That is not penalty. Please understand, this is popular adjustment again. Sir, we all know that I constructed, I installed a machinery 2 years, if it is not running without any problem, I need to penalize. I am liable to pay some compensation. In compensation itself, I told you, for me, it is a revenue expenditure. For the receiver, it is a revenue income, unless it is associated with an asset. Now, coming back. Penalty is only for violation of law. Penalty for breach of terms of contracts are allowed as deduction. Okay, because why I am saying this is, if you look at the agreement, contract, the wordings used is penal clause. That doesn't mean it is penal. Penalty can be levied only by government. You and I enter into a contract. I am not fulfilling the terms, so I am paying some penalty. It is allowed. It is allowed as an expenditure. Interest on delayed payment of GST allowed, my dear friends. Interest is not to be treated as penalty. Interest is not to be treated as penalty. VRS compensation, 5 equal installment, whereas retrenchment compensation allowed in the year of incurrence. Secret commission takes the character of offensive payment. That's why you are keeping it secret. It is not allowed. Friends, this is one other popular adjustment in our question. I collected from her GST. I paid to the government, but I challenged the levy of GST. I won the case. The government refunded the GST to me. What should I do? If I don't do it, it's an offense is different. Sir, income tax law is not bothered about whether you are, income tax law has one concept called, even if you are earning illegal income, you are a smuggler. Please pay tax, I will give you best taxpayer award. Because our law is not worried about it. If I don't repay, they give it to her, it is an income. Okay? Where the levy is challenged and they are refunded back to the assessee. In turn, assessee has to refund to the customer. Where assessee fails to refund or not able to trace the customer, then it shall be treated as income. I'll come to closing stock, opening stock. One-time license fees, I told you. Okay, this is Honda CL case. Okay, for a longer period, our friend also told, it's an intangible asset. Only depreciation can be claimed. Only depreciation can be claimed. Expenditure on funds, XJ forgings. Okay, where there is no existing director's son or relative is the first or the only beneficiary. Not only the terminology only, it can also be first. Okay, please read through. Except 3 things I have completed. The other 3 things which I have not ticked, I'll complete. Please read through. Okay, remember these pages. Before exam also, these pages are very, very important. At least 4 adjustment comes. As we go by, you will understand. Okay. And I'm not at over. I'm just saying. Friends, we all are aware, at least at the basic level, about this tedious provision under 194C. Contracts. Okay. The tax is liable to be deducted on all types of contract. Catering, advertising, everything becomes a contract. And tax is liable to be deducted at 1% if the receiver is an individual or HUF, 2% any other person. Okay. There are 2 exceptions which always becomes a question. There are 2 exceptions to this. Okay. The first exception is resident transport operator. Okay, resident GTA. What is the exception? If he gives a declaration, and PAN, tax is not liable to be deducted at source. What is the declaration he gives? I don't own more than 10 vehicles. So he's coming under this 44 AE presumptive computation. Okay, where the resident transport operator gives declaration and PAN. Declaration is not owning more than 10 vehicles. Okay, declaration and PAN, where the resident transport, okay, then, okay, no TDS. So in examination question, it will be an adjustment. In the question, it will be an adjustment.
They are providing education for college after completing their evening after completing or they're getting work from the
Which companies?
HCL.
They are not, for everybody it is there, right? Yeah, it is allowed. Proper revenue expenditure, staff training expenditure, whatever you call it. Am I clear? Second is job work. Job work. My dear friends, what is the difference between sale and job work? Okay, I will give you an example. I place an order to supply 1,000 t-shirts with Bharatwaj Institute logo. I provide the t-shirt, ask them to print Bharatwaj Institute logo. Which is sale, which is job work?
Second is job.
Second is job work. How to define it? Where raw material is supplied by the customer or any related party of the customer, what the job worker does is pure contract. Where I place the order and leave that to the job worker. Job worker goes, procures the raw material and supplies me the finished goods. Even though it's a specialized order, it is sale. 194Q will only get attracted, not 194C. Not 194C. Okay. Difference between sale and contract is on the basis of who supplies raw material, where raw material is supplied by customers, where raw material is supplied by customers. Okay, my dear friends, where raw material is supplied by customers or related persons, then it is pure contract. Where order is placed, job worker obtains raw material, and supplies finished goods. Then it is sale. No 194C, only 194Q.
Who places the order in this job work?
Customer places the order. Just the order. I told him to give me 1,000 t-shirts with the Bharatwaj Institute logo. That's all. Customer places the order. Am I clear? Okay. So I'm again telling you, when I'm coming to 194C, I will not deal with this. Okay. Let's many tedious provision. I'm going to consolidate and finish it along with the when we go to capital gains. We will see all the tedious of sale of immovable property, etc. So that you should not study tedious as a separate chapter. Tedious is an inbuilt chapter in everywhere. Okay. So that way we'll also save a lot of time. Okay. Right.
The contract manufacturing also noticed.
Sir.
Contract manufacturing also noticed.
Contract manufacturing is again based upon who supplies raw material. Section 194J. I'm not talking about all these professionals, etc. now. I'm not talking about, okay, purchase of software. Should tax be deducted at source? Yes. Tax needs to be deducted at source if you purchase software. Okay. If you purchase software, tax needs to be deducted at source. The same 30,000 limit. This year might be 50,000, but last year we are still in from your office. You have to switch your mode to examination. It is still 30,000 only for your examination. Okay. Purchase of software is a 194J. They are liable to deduct tax at 10%. Two cases where tax TDS is not applicable. Where the software is purchased with the intention of reselling it. So it becomes more like goods, stock. Where the software is purchased with the intention of reselling it. Or where the supplier provides a certificate that it is already tax suffered. In some earlier stage, somebody else has deducted tax at source. Probably it has already tax suffered under section 195. Okay. So don't apply 194J. Okay. Two circumstances. For non-deduction. Purchased for reselling okay, where a declaration is provided that tax has been deducted at earlier stage. Especially in your office, when you go, if you find Adobe being purchased, they will give a declaration. Am I clear? Okay. Right, friends? Section 30 to 37. 30, expenses in relation to building. 31, plant, machinery and furniture. 32, the long travel depreciation, normal, additional, proportionate, unabsorbed. 33 is deposit based deduction, plantation sector and site restoration, oil and natural gas. No 34. 35 scientific research. 35 AD specified business. Then the social welfare deductions of national committee contribution, agricultural extension program, skill development only for Indian companies. 36, I'm sorry, the amortization. Okay, amortization. We saw 8 amortizations. 5-year period. Preliminary expenses, amalgamation demerger expenses, VRS compensation, capital expenditure on promotion of family planning incurred by an Indian company will be 5 years. Long term are telecommunication license, spectrum fees, zero coupon bonds, BOT projects. Okay, in all these things, long term. 36, mainly employee focused, all contributions and stock focused along with provisions we saw. 37 is conditions, then followed by case laws of capital and revenue nature case laws. Then we discussed over. In this, I have asked you, apart from your notebook, you should read 5 pages. You should read those 5 pages. Always keep that 5 pages in your. When we started the chapter, allowable expenses is divided into 3. We completed the first part, expressly allowed by law. Now expressly disallowed by law. Expressly disallowed by law. TDS default. Section 40A. TDS default. Section 40A. You know tax deduction at source. I need not say you the fundamentals of it. A payer is liable to deduct the tax. The payer is liable to deduct the tax at the specific rate mentioned in the section and remit it to the government account. Okay. So as a payer, I have 2 responsibilities. Deduct tax, remit the deducted tax. My responsibility is only 2. Okay, right, friends? Deduct tax. My first responsibility is I should deduct tax. Okay, deduct tax and remit that deducted tax. Deduct tax, remit the deducted tax. What is meant by deduct tax? What is meant by, I mean, when I should deduct tax? Okay. TDS law, let it be at the time of payment or at the time of credit. As far as we are concerned, on or before 31st March. On or before that. There are other penalties where you are not deducting within that. I am not looking at. I am for 40A. Okay. On or before the end of the year. On or before due date of filing. Tax has to be deducted on or before the end of the year, and it has to be remitted on or before the due date of filing. Once more, tax has to be deducted on or before the end of the year and remitted on or before the due date of filing. Any one not done, it is a default. Any one, if you are not doing, either you are not deducting before the year end or not remitting within the due date of filing return, we call it as default. We call it as default. %30 of expenses disallowed if receiver is resident. 100% of expenses disallowed if receiver is non-resident. Okay, where there is a default, now I'm telling you in a simpler manner. Where there is a default in TDS, 30% disallowed in case receiver is not, 30% disallowed. However, 100% if receiver is non-resident. What is default? Not deducting on time or not remitting on time. Friends, this is said in 4 sections. For non-resident, 1 section. For resident, 1 section. For non-resident salary, another section. Not necessary, friends. This is the rule. This is the provision. Okay. Sir, this is a mistake I did. I was not aware that tax has to be deducted at source. Having become aware, I am making the rectification of default. I am correcting my mistake. Having known that I have done a mistake, I am proceeding to correct my mistake. Okay. In the year in which you are rectifying the default, I will allow whatever I disallowed as an expenditure. Okay. Now, default rectification. Default rectification. Okay. What is meant by default rectification? Tax is deducted and remitted later. Tax is deducted and remitted later. This is default rectification. Tax is deducted and remitted later. This is known as default rectification. You all understand? You all understand? Are you clear? Okay. Let us understand why TDS. Let us understand for a minute why TDS. Okay. Sir, I am paying her rent of 50,000 per month. I am paying her rent of 50,000 per month. 6 lakhs per annum. I am paying her rent. If I don't claim it as an expenditure, my profit will be more by 6 lakhs. I have paid the rent, but I will pay tax also. So always the person who is paying will claim it as expenditure. Is there a possibility that the receiver is not showing it as income? Okay. You don't have confidence on yourself. Okay. Okay. There is a possibility. So came TDS. Cross-checking mechanism. Continuing with the example, my dear friends. I paid her rent without deducting salary. You disallowed 30%. Now I go and tell her, this year, last year I failed to deduct that 60,000 rupees. Now I am going to deduct. Now she tells, boss, don't deduct. Taking this as income, this provision itself is a cross-checking mechanism. Taking this as income, I have filed my return and paid the tax. You again deducting will put me in an unnecessary difficulty. Law has recognized this, my dear friends, where proof is submitted by receiver. Of considering income and paying tax. Okay, where proof is, that is also default rectification. Default rectification means two things: I realizing the mistake and deducting it. Two, she coming and telling me, no, 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 don't deduct it again. I have come, I submit you the proof, ROI, return of income, saying I have taken it as income and pay the tax for it. Okay, both are default rectification. Okay. The disallowed amount will be allowed in the year of default rectification. The disallowed amount will be allowed in the year of, in the year in which default is rectified. Is the class clear? Any doubts? Any doubts? Yeah.
Expenses we are paying, that the recipient paid that tax.
Yeah, and submits the proof to you, then it is allowed. Then it is allowed.
Irrespective of individual,
Whoever it is, whoever the recipient, whoever the payer is. If you get the proof, it is allowed.
then it will make a loophole for any process.
No, no. Why? Because first year you will disallow it. Next year only you will allow it. Because proof is submitted only in the next year. So that is not a loophole. Okay. Loopholes we will have a separate class apart from our TT class. Okay. Right. My dear friends. I'm going to go to a case called Maruti Suzuki Limited. Maruti Suzuki Limited. Friends, you know, this automobile exhibitions are taking place at various places and many players participate. Automobile exhibitions. So, a German-based organization conducted an automobile exhibition in Germany, and Maruti Suzuki participated in that. For that, they paid the stall charges. The German company said, don't deduct tax. We have nothing to do with your country's operation. My entire services are performed in Germany. My entire services commence and gets completed in my country. I don't have a permanent establishment in your country. So this is not an income which accrues or arises for me in India, because I do the entire thing outside India. So tax is not liable to be deducted at source. Maruti, the case went to the court because assessing officer disallowed 100%. The court took a assessee favorable stand, where for the receiver it is not an Indian income. For the receiver it is not taxable in India. When the source of when the services are completely outside India, and when the receiver does not have a permanent establishment in India, it means, okay, it is not accruing or arising for the receiver, in that case, the payer is not liable to deduct tax, or non-deduction of tax will not entitle 100% disallowance. Write down Maruti Suzuki Limited. Where the receiver performs whole of the service outside India, where the receiver performs whole of the service outside India, does not have PE in India, does not have permanent establishment in India, then income, then the payment made is not subject to TDS. Is not subject to TDS. So you need not disallow this expenditure. You need not disallow this expenditure. Is the class clear? Is the class clear? Okay. Remember, this is TDS default. Next. Okay. I'm continuing with 40A. I'm continuing with 40A. Don't worry about subclass 1, subclass 3, subclass 40A is more than sufficient. More than sufficient. Income tax, wealth tax. Now it's not there anyhow. Provision for income tax, advance income tax, interest, tax on perquisites, penalty, are all not allowed. Because just now I said interest on GST is allowed. Because there's no specific disallowance provision. Interest on income tax is always not allowed. Interest on income tax is not. That's why I said interest on loan taken for payment of income tax takes the character of interest on income tax. So it is not allowed. So it is not allowed. Okay. Interest on income tax. I'm only talking about income tax.
What if the payment is done through an ODM?
Sir?
What if the payment is done through an ODM? Interest will always be allowed.
Yes. You cannot identify, means that is different, sir. If there is a specific loan for income tax and the interest is disallowed. If it is a general OD or OCC account, you cannot, sir, accept it, sir. Okay, friends, are you clear? Income tax, wealth tax, provision for income tax, advance income tax, interest on income tax, tax on perquisites, penalties, nothing will be allowed. Nothing will be allowed. Okay. Now for a very soft amendment, not amendment, interpretation, which is disputable, but assessee favorable, so we will not dispute it. Friends, 234A, belated filing of return. 234B, non-payment of 90% at least as income tax, advance tax. 234C, non-payment or short payment of installments of advance tax. 234E, 234E for not filing the TDS returns or not. Okay, that is an interest for TDS filing or rate filing, 200 rupees per day, etc. Okay, I'll come to that later. Now, please understand. Income tax, interest on income tax not allowed. He was also interest on income tax, my income tax not allowed. 234A, I am not filing within the due date. 234B, I am not paying advance tax. 234C, I am not paying. It's all my tax. 234E, the tax of hers, I am paying late. The tax of hers, I am filing late. 234E interest alone takes a very different character. 40A strictly interpreted says, boss, it is the interest of assessee. Whereas 234E, it is not the interest of my tax, it is the interest of her tax, the receiver's tax, which is getting delayed. So by an interpretation, it is said 234E interest alone is allowed. 234E interest alone is allowed. In that page, whichever I have given only, it is there. Normally, any interest under income tax law shall be disallowed. It takes the character of income tax. However, one interpretation is 234E. It is the delay in payment of another person's income tax and not that of assessee. Hence, this will be allowed. As of now, we are taking this approach only. Examiners are taking this approach only, and they are allowing it. Am I clear to you? Yes. Let's start with the practical questions. Company made the following payments to resident without deducting tax at source. What are all the tax consequences? Salary, non-compete fees, director's fees. Will your answer be different if the company has deducted tax in the month of April and remitted it in July? Shall I? Shall I? Okay. Friends, one interesting thing which you have to remember is normally 194J threshold is 30,000 except for director's fees, which is zero. This question is framed in such a manner 28,000. Okay. Please remember, for director sitting fees, threshold is zero. Right from rupee 1, it is taxable. During the financial year, the following expenditures were made by Mr. Yuvan Raja, a resident individual with a turnover of 99 lakhs in the last year. Briefly discuss the allowance or disallowance. Remember this, if you are an individual or HUF and your gross turnover, basically these people will opt for presumptive computation, etc. Though up to 2 crores, but generally I'm saying. So the following provisions, tedious provisions, are not applicable for them. Now going into case A, interest of 45,000 paid to a resident firm without deducting tax. Rupees 3 lakh was paid as salary to a resident without deducting tax at source. This is covered. This is covered because
Even if it is less than the basic exemption limit,
no.
it is.
No, if it is not less than the basic exemption limit, no TDS. If tax is not liable to be deducted at source and he has not done it right. Here, if it is liable to be deducted at source, 192 is applicable 30%. I see the amount lesser, but it's a very old question, that's why. Am I clear? Am I clear? Just a moment. Shall I? I'm progressing forward, friends. I'm progressing forward. I'm moving on to section 40A, capital A. Section 40A provisions. Section 40A, subsection 2, payment to relatives. Section 40A, subsection 2, payment to relatives. Section 40A, subsection 2, payment to relatives. Okay, right? Is it a prohibited payment? No. Okay. Payment allowed up to fair market value. Payment allowed up to fair market value. Any payment in excess of FMV, any payment in excess of FMV, such excess is disallowed. Any payment in excess of fair market value, such excess alone is disallowed. Any payment in excess of fair market value, such excess alone is disallowed. Class clear? Okay. So don't worry much about relative. For a firm, partners relative. For a company, companies under same management. Director, if he is a partner of a firm. Okay. The terminology will be very clear in the exam. Okay. Any payment in excess of fair market value, such excess is disallowed. Okay. Now, payment, first listen, payment otherwise than by approved modes. Payment otherwise, even before going into the section, I want you to understand this. What is meant by payment by approved modes? They don't use the word not approved. They use a terminology otherwise than by approved modes. The approved modes list is bigger. Account payee check, account payee draft, RTGS, NEFT, credit card, debit card, RuPay payment, IMPS, all these are approved modes. Instead of remembering that, remember what is other than approved modes. Cash, bearer check, crossed check. Account payee check is approved mode. Cross check is not an approved mode. It's otherwise done by. Only three things are otherwise done by approved modes. Cash, bearer check, and crossed check. Remember, account payee check is approved modes. Crossed check is not approved modes. Okay. In the Supreme Court judgment, they said, account payee check. If I give you an account payee check, only you can encash it in your account. If I give you a crossed check, you can endorse it to him. Okay. This I read it in the Supreme Court judgment and understood. Otherwise, like you all, I also left Negotiable Instrument Act by choice. Okay. So I don't know when the Supreme Court gave the judgment, I understood this. Okay. So there are three modes of payment which are unapproved modes or otherwise than by approved. Cash, bearer check, crossed check. Now, please remember, okay, if asset is purchased by paying more than 10,000 otherwise than by approved modes. Okay. Such payment will not be included in cost of asset. Where asset is purchased by paying more than 10,000 otherwise than by approved modes, what happened? Such payment will not be included in the cost of the asset. I purchased an asset for 2 lakhs, 25,000 I paid by cash. The asset value will now only be 1,75,000. 1,75,000. Okay. Same for 35 AD also. If you make an expenditure, that's also a capital expenditure, otherwise done by approved modes in excess of 10,000, the whole of such amount will not be considered. You understood this? Now I go for the expenditure provision under 48(3). You want me to? Disallowance, my dear friends, disallowance for payment otherwise than by approved modes. disallowance for payment otherwise than by approved modes. (40A) subsection 3. 40A subsection 3A. Exceptions. Okay, friends. Okay. On a single day, to a particular person, on a single day, to a particular person, payment exceeds 10,000, paid otherwise than by approved modes, on a single day, to a particular person, payment exceeds 10,000 and paid otherwise than by approved modes. Whole of such expenditure payment is disallowed. Whole of such payment is disallowed. Once more, on a particular day, to a particular person, if the total payment exceeds 10,000 and it is paid otherwise than by approved modes. If I have paid 30,000, 20,000 is not disallowed. The entire 30,000 is disallowed. The entire 30,000 is disallowed. Is the class clear? On a particular day, to a particular person, if payment is made otherwise than by approved mode in excess of 10,000, the whole of such payment is disallowed. Section 40A, subsection 3. Okay, sir. Okay, sir. So let me make you understand. I purchased the goods from her. Purchases account debit to creditors. I paid by cash. Creditors to cash. The entire purchases is disallowed. In excess of 10,000 means the entire purchases is disallowed. Do you understand this? Okay, right? I have to pay her salary. Sir, please understand. I have to pay her salary of 50,000 rupees for the year ending 31st March. I am paying on 10th of April. 31st March entry. Salary account debit to outstanding salaries. 31/3/24 entry. Salary account debit to outstanding salary. 23/24 financial year. Is there any violation? No. In the year of payment on April 10th, outstanding salaries account debit to cash. Is there a violation? Yes. But there is no expenditure to disallow. Remember, in the year of expenditure, no violation. In the year of violation, no expenditure. The law says expenditure which are debited to profit and loss account will be disallowed if there is a default. Expenditure is in 23/24. Payment is in 24/25. The violation. I am unable to disallow in 23/24 because there is no violation. I am unable to disallow in 24/25 because there is no expenditure. Okay. Inside this room, let's be honest, we are the reason for this interpretation. So income tax law brought 40A 3A. where any preceding year's expenditure. What is the difference between previous year, preceding year? Previous year is, for example, for us 24-25. Any year before that is known as where any preceding year's expenditure, which is accrued, which is accounted on mercantile basis, is paid in the current year, violating 40A3. Violating 40A3. Now there is no expenditure to disallow, except such payment will be treated as income. In the year of payment, such payment will be treated as income. You understand the difference between why two sections? Okay. Where any expenses of preceding year accounted on mercantile basis is paid now, violating 40A subsection 3, then such payment made will be treated as income in the year of payment. Such payment made will be treated as income in the year of payment.
With respect to section 40A3, is there annual how much can be paid within 10,000 rupees or 200 days payment the next one?
Every day 9,900 rupees you are paying, no disallowance.
Happen in construction contracts.
Huh?
Construction labor payments are
No, nothing can be done. You are a typical chartered accountant. Okay. Rule 60, some exceptions. The first exceptions is not in Rule 60D as in 40A3 itself, but since all exceptions are there, I am writing there. For resident transport operator, limit 35,000. Limit is 35,000 for a resident transport operator. My dear friends, already for resident transport operator, I taught you something, 194C. Okay, declaration and PAN given? No, this is second provision for the resident transport operator. This is in 40A3 itself, but anyhow, agriculturist, fisherman, payment in a village where there is no bank. Payment in a village where there is no bank. Okay, friends. Okay. Payment to employees posted temporarily outside base location. Law was written when there is no GPA, etc. So if he is a Chennai employee, he is sent to Lucknow for some work. There you can pay him in cash. Payment to employees posted temporarily Temporarily means less than 90 days. That's what the law says. Outside the base location. Payment to employees or family members. Okay. Pay family members up to 50,000 on retirement, resignation, death. Once it was questioned. Previously, there was something known as payment on a bank holiday that has been removed. Okay. Now payment on a bank holiday also, you have to wait for the next day, or there are various other modes of payment you can. Am I clear to you? 40A subsection 3, 3A and exceptions which are mentioned in rule 6DD. Okay. Other disallowances. Other disallowances. 40A subsection 7, provision for gratuity. (40A) subsection 9, payment to unrecognized funds. Payment to unrecognized funds. In both the cases, disallowed. 40A subsection 7, provision for gratuity. And 40A subsection 9, payment to unrecognized funds, disallowed. Disallowed. Am I clear to you? Am I clear to you? Friends, disallowance provisions are there in 40 and 40A. Okay. 40 speaks about TDS disallowance. 30%, 100%, Maruti Suzuki case law. Okay, when I say TDS, I also mean equalization levy. Now that is going off the law, only one section is there now. Okay. 40A also speaks about income tax, provision for income tax, advance tax, interest on income tax of the assessee. Penalties are disallowed, including the wealth tax. And we know what is 234E interpretation. Then comes 40A subsection 2, payment to relatives. 40A subsection 3, payment in excess of 10,000 made otherwise than by approved modes. 40A subsection 3A and the exceptions under rule 6DD. 40A subsection 7, provision for gratuity. 40A subsection 9, payment to an unrecognized funds. Am I clear to you? Okay. I'm keeping 41 on a pass mode. I'll come back to 41. I am leading to 43B. The third part of our disallowance is under 43B. That is statutory payments. That is statutory payments. There is some explanation and there is there. I am going to divide statutory payments into two and discuss. First part of 43B, I will speak about 6 payments. MSME payments, I will deal with it separately. Okay, so part 1, part 2. First, I am going under 43B, statutory payments. for government, for employees, for banks and financial institutions. For government, for employees, for banks and financial institutions. For government, any tax, cess, duty, employer contribution to PF, employer contribution to PF, payment to railways for using their assets, payment to railways for using their assets. For employees, bonus and commission, leave encashment. For employees, bonus and commission, leave encashment. For banks and financial institution, interest. Six statutory payments I am first covering. Any taxes, duty payable to government, employer contribution to provident fund, railway payment to railways, Indian Railways for using their assets, bonus and commission payable to employees, leave encashment payable to employees, interest payable to banks and financial institutions. Common provision. If these are due at the end of the year, the same will be allowed if these are due at the end of the year, the same will be allowed only if it is paid on or before due date of filing returns. Only if it is paid on or before due date of filing returns. Where it is not paid, disallowed in the year of incurrence. And allowed in the year of payment. Where it is not paid, disallowed in the year of incurrence and allowed in the year of payment. Where it is not paid, it is disallowed in the year of incurrence and only allowed in the cash basis. Only allowed in the year of payment. Am I clear to you? 6 types of statutory payments will be, if it is due on 31st March, it will be allowed only if it is paid within the due date of filing returns. Otherwise, it will be disallowed. And however, the same will be allowed in the year in which it is paid. Okay. right? Going little further. Okay, heading employer versus employee contribution. Employer versus employee contribution. Employer versus employee contribution. Have two columns, my dear friends. Divide it into two columns. On the left hand side, employees contribution. On the right hand side, employer contribution. On the left hand side, employee contribution. On the right hand side, employer contribution. Okay. Okay, first I'm writing employee contribution side. Okay, needs to be paid within the due date of respective law. Friends, this needs to be paid within the due date of 10th, 15th, PF law. It needs to be paid within the due date of not income tax law, respective law. I'm still in employee side only. Where it is not paid, then the unpaid amount, unpaid amount will be treated as income. Where it is not paid within, you will give it in 3CD. Okay, where it is not paid, then the unpaid amount will be treated as income. Subsequent payment expenses will not be allowed. Very important, extremely brilliant provision. Later you pay, can you claim it? No, you cannot. After the due date, if you are supposed to pay on 15th and you paid on 16th, it will be treated as income and that expenses will never be allowed. Section 36 read along with section 2 subsection 24. Go to the other side, employer. Go to the other side, employer. Needs to be paid within the due date of filing returns needs to be paid within the due date of filing returns under income tax law. Where it is not paid, the unpaid amount will be disallowed. However, the disallowed amount will be allowed in the year of actual payment. Here, the law is soft.
Current day scenario, we have always pay both together, employee.
Once more.
Current day payment, online payment, we cannot pay employee contribution separately and employer contribution.
Yeah. Got your. If you pay late, employer contribution will be allowed if it is within employee's contribution will not be allowed.
Dangerous.
Well, because it is not your money. Employee gives the money with the trust that you will deposit in his account. Your money you can pay it late, but money which is given on trust, you should not take it. That's why. Am I clear? Okay. This is the first discussion of 43B, which is very important. Very important. Okay. Questions are coming both on employee and on employer contribution. Please remember. So, friends, please understand this. Okay. There is an listen only first. Okay. There is an outstanding interest. There is an outstanding interest, my dear friends. There is an outstanding interest. For the past 3 years, you have not paid the interest. So that itself has amounted to 10 lakhs. The bank converts it into a term loan. Listen. The bank converts it into a term loan. What happens? The law says allowed on the basis of installments. Whenever you are paying the installments, get it. The bank says that 10 lakhs has to be paid as 20 installments, 50,000 per installment. You have paid 3 installments, 1,50,000 allowed. Am I clear? On cash basis. That's what I am saying. On cash basis. Issues debentures or bonds. For the outstanding interest, the company converted the interest into debenture or bond. I need to pay you 10 lakhs. I issued debentures worth 10 lakhs. I issued debentures worth 10 lakhs. Can it be allowed now? No. Cash basis only it will be allowed. Sir? Allowed in the year of?
On redemption.
Very good, sir. Allowed in the year of redemption. Allowed in the year of redemption. Only in the year in which you are redeeming the debentures or bonds. Organization provides bank guarantee not considered as payment for any tax due, other things. The organization provides guarantee. No, that is not payment. That is not payment. That is not payment. That will never be considered as payment. Is the class clear? Okay. Okay.
Interest on the term loan or debenture is allowed as expense.
Allowed, sir. Allowed, sir. Yes, sir. Shawson Chemicals. Shawson Chemicals. My dear friends, I provided for bonus on 31st March. which will normally paid in August or September, Diwali occasion, whatever it is. I provided for the bonus. At the time of bonus payment, the employees are not accepting the bonus, saying, boss, the bonus is not sufficient, we are not accepting. The company transferred the entire bonus to an employee trust, irrevocable trust. That is, the company cannot get back the money. The company cannot get back the money, so they transferred the entire money to irrevocable trust, employee trust. Meanwhile, a settlement has been arrived at. From the trust, they paid the money. The question is 43B fulfilled? Has the payment been made? Yes, I accept all your answers, but very carefully understand. The beautiful judgment is you transferring to the trust paying to the employees, fine, acceptable, provided the trust has paid within due date. Here, that's why I made this in a different color. The paid is the key factor. Here you can see allowed on installment. Sir said allowed when it is redeemed. The terminology payment is very key factor of 43B, friends. If payment is not made to the beneficiary, you cannot claim under 43B. Payment has to be made, not guarantee, not conversions, not issue of debentures, not even to an employee trust. Okay, in this case, yes, it has been paid. Where money is transferred to an employee trust, and payment is made from the trust within due date, then allowed. Remember, this is the keyword. The payment has to be made within the due date. Is the class clear? Is the class clear? Remember, from the employee trust, it has to be paid within due date. So the interpretation is, if the employee trust has not paid within the due date, disallowed, and allowed only in the year of payment. 31st July, sir. 31st was October, sir. Due date of filing returns, or 30th November, depending upon which case. Okay.
The burden has never shifted. It's up to the employer to follow with it.
Yes, sir. Yes, sir. Never shifted to the trust, sir. Correct. Okay. And one standalone section in this 43B is 43BH, MSME payments. One standalone. Madam Finance Minister has twice said she will revise it. Okay. MSME payments. 43BH, MSME payments. Okay. If it is due at the end of the year, friends, the provision is for due at the end of the year, then we should see whether there is an agreement or no agreement. We should see whether there is an agreement or no agreement. Where there is an agreement to be paid within agreed days or 45 days, whichever is earlier. If agreement is for 35 days, 35 days. If agreement is for 50 days, 45 days. To be paid within agreed days or 45 days, whichever is earlier. Where there is no agreement, to be paid within 15 days. To be paid within 15 days. This is not for default happening in between the year, within the same year. It is on the outstanding balance as on 31st March. It is on the outstanding balance as on 31st March. To be paid within 15 days.
So payments made to AMS.
Payments to be made to MSME. Okay, right? Where it is not paid, common point. Where it is not paid, disallowed and allowed in the year of actual payment. And allowed in the year of actual payment. I am leading you to question number 23. Leading you to question number 23. Hari, an individual, carries on business of purchase and sale of agri products. He borrowed loan from SFI and Indian Bank and has not paid interest of 22-23, 23-24. SFC and Indian Bank restructured the interest into a loan facility to be repayable in 60 installments and 45 installments respectively. For the year ended 31st March, 5 installments of Indian Bank and 3 installments of SFC are paid. Compute the amount of deduction that can be claimed under 43B during the current year. Where it is converted into a term loan, remember, based upon the installment paid. Converted into 60 installments, 3 installments paid now. Converted into 45 installments, 5 installments paid.
Sir, the screen is blurred, sir.
1 minute. For all of you, it is blurred.
Yes, sir.
Yes, sir.
Can you check whether it is better now? Is
No,
it?
sir.
No, not better. Can anybody else confirm whether it is better or the same?
No, sir. It's still blurred.
One minute. So in this case, current year 4,08,333 can be claimed. Goods purchased from MSME amounted to 40,000. Discuss the allowability. This on purchased on 1st March 25, so it is still outstanding. That's why. Where there is an agreement to pay within 35 days and the payment is made on 2nd April 25. Case A. Agree. Okay. Before that, date of transaction 1st March. Case A. Agreed to pay before 35 days. Hence, needs to be paid on or before April 5th. Actual payment 2nd April. Hence, allowed in the financial year 24-25. Case B, where there is no agreement, payment needs to be made within 15 days. It has not been made and the amount is outstanding on 31st March 25. Hence, disallowed in financial year 24-25 and allowed in financial year 25-26. What is that?
31st March 25.
Where there is an agreement to pay within 35 days but paid on 7th April. Where there is an agreement to pay within 50 days.
Your agreement means a written agreement.
Yeah. Can I? Can I? All of us?
No, sir. Wait
Yeah,
for a minute.
sure, sure, sure. Homework. Mandatory homework. Mandatory homework. Yesterday's homework answer I'll show you. Mandatory homework.
5%.
Sir?
Number 25, sir.
Question number 25, sir. Mandatory homework, you will understand a lot. So, section 43B. Friends. We have already covered 43A. Forex fluctuation in case of assets. So, actually, Forex fluctuation is in two sections, 43A, 43AA, 43A and 43AA. 43A is for assets, which we have already covered. 43AA, other forex fluctuation, revenue in nature. That is, you will record the income or expenditure. You will record the income of expenditure. Okay. 43C. On construction contracts. I will deal this in ICDS 3. The same we will be dealing with in ICDS 3. (43CA). The section number will itself tell you that it is the most confusing section. It should be CAs. 43CA, anyhow, not sale of immovable property. I will deal this along with section 50C. If it is stock in trade, it is coming under 43CA. If it is a capital asset, if it is an investment, it is coming under 50C. So together we will deal it in 50C. Once more. CDCS. No, no. Somebody that's a wrong information. Sir. ICDS is integral part of income tax. Wherever there is a conflict between ICDS and tax law prevails. If at all there is a conflict, no sir. Now, slowly they are making ICDS provision as also part of the income tax law so that ICDS can be removed. Am I clear to you?
ICDS also the same visibility.
ICDS?
Again, was the same visibility or?
Sorry, question was not clear.
No, who framed this ICDS?
Who frames, sir? Department. Department. Same CBDTs. Let's see. So this is 43. Okay. The other things like NPA, interest, etc. Don't worry about it. 44 is full of administrative, but before going into it, let us understand section 41, deemed income. Section 41, deemed income. Friends, any expenses, losses, deduction allowed earlier, now recovered, it is an deemed income. Any expenses, losses, deduction which is allowed earlier, now recovered, it will be treated as business income. It will be treated as income. Yeah, Mahalakshmi, are you asking about the homework answers? I will definitely share. Any expenses, losses, deductions allowed earlier, now recovered, it will be treated as deemed income. Example?
Trade liability.
Bad debts recovered. Okay, easy example. But we all know sale of scientific research asset, sale of specified business asset, okay, sale of telecom license. These we claimed scientific research asset. We claimed it as an expenditure. When we sell, it is an income. That is why if it is sold over and above the original cost, because up to original cost only you have claimed, that is capital gains. Okay. Any trading liability.
Telecom license is anyway amortized.
Foregone. Yeah, if the sale value is more than the license value, that means you have excess amortized. Sir, 10 lakhs, you have so far amortized the 3 lakhs, WDV is 7 lakhs. Now you are selling for 8 lakhs. What about that 1 lakh?
That is deemed.
Deemed income, because you have over amortized. That's the logic. An expenditure which you have claimed is now recovered. any trading liability foregone or written back. Okay, I don't know how many of you listened when I asked the example for the first one. Rajagopal was saying creditors. Creditors comes here. Okay, right? Okay. I have always told this. I again tell you, accountancy is slightly unfair. It thinks your debtor will not pay you, so coined the term bad debts, and it assumes that you are God's son. You will go and tap the doors of the creditor. Sir, I have to pay you money. So never coin the term for not paying creditors. Income tax law is not ready to believe. So that's why any trading liability foregone or written back. So creditors write back. Creditors write back is a business income. Am I clear here? Deemed income. Shall I move on? Okay, so remember this. So whenever there is a foregoing of creditors, it will be treated as income. That leads us to this interesting thing of waiver of loan. How to treat it? How to treat waiver of loan? There can be these things. Term loan, working capital loan, interest waiver. There can be term loan, working capital loan, and interest waiver. What about waiver of term loan? Why do we get term loan? To purchase assets. To purchase assets. Term loan is for purchase of assets. Sir, 50 lakhs of worth of asset, 40 lakhs I got loan, I paid only 35 lakhs. Last 5 lakhs not paid, adjusted with the cost of the asset. Whatever is the WDV, you adjust it. You go and reduce it in your block. Okay, because the asset value is now only 45 lakhs. Adjusted with cost of asset. Adjusted with cost of asset. If overdraft or cash credit, okay, working capital loan is foregone, it will be treated as income. If working capital loan is foregone, because the law says any foregoing or write back of trading liability will be treated as income. Will be treated as income. So this will be considered as income. Waiver of interest.
The WDV is lesser than the amount gains.
Short-term capital gains, sir. Waiver of interest. That's the correct answer. The law is silent. The law is like you all. Okay. And that's what it is. That's the answer, friend.
Already it is
Very good.
43B.
Already I have treated it as income. 43B I have disallowed. Okay. Concept of Hinduism. Maya. What is not there is being waived. Understanding? That liability itself is not there. That is there in the books of accounts. But according to income tax law, we have added back in those respective years 43B disallowance. So there is nothing called outstanding interest under the income tax law. When it is not there, what is there to be waived? You understood? So, okay, no impact. Already taxed. And taxed. Already disallowed and taxed. Class led, can I call you back? Hello? Class led, can I'll call you by 10:15. Sir, you want me to repeat? Interest of 22-23, 1 lakh. In that year, you have disallowed it. In our income tax adjustment statement, you have disallowed it, which means you have taxed it, added it back. Now, the bank is waiving that interest. Books of accounts, the entry has to be passed. Reversed, the entry has to be outstanding interest account debit to income, that is books of accounts. But as far as income tax law is concerned, I have already taxed it. So that liability itself is not there. What is there to waive? Am I clear to you? Okay. Discussion on bad debts recovered. Discussion on bad debts recovered. Friends, listen. Sale 10 lakhs. I sold for 10 lakhs. Bad debts became 8 lakhs. Last year I write off 8 lakhs. Recovered 3 lakhs. What is income? 1 lakh. That's the answer. There is still an outstanding of 2 lakhs. Whenever you recover, first apportion towards the outstanding. Balance, if any, only will be treated as bad debts recovered. Bad debts recovered. Okay. Discussion on bad debts recovered. A small note where debtors is not fully written off. Where debtors are not fully written off. Where debtors are not fully written off. Then, at the time of recovery, first apportion towards balance in the books and any excess recovery will be treated as deemed income. Am I clear? Okay, right. So moving on to the last section 44, which is divided into two: administrative provision, presumptive computation. Administrative provision, presumptive computation. Administrative provision has two things.
Same treatment for succession also.
Yes, sir. Yes, sir. Yes, sir. In all the succession cases, provisions will apply to the transferee entity as it would have applied to the transfer or entity had the event not happened. So now, administrative provisions are two: maintenance of books, mandatory audit, 44AA, and the section why you are all studying CA. Why I studied and you are all studying. Okay. So we know that every book, every magazine, every newspaper we read will have lighter moments. Okay. Income tax is also a book which has lighter moment. I know I can give you some examples of lighter moment. The first lighter moment which you have studied in your inter is children education allowance, 100 rupees per child. Where are we? 100 rupees per child. And we thought we can use it as a family promotion exercise, maximum of 2 children. As if a person will not have third child because he will not get children education allowance. Okay, that's the best humor. Written in 70s. Okay, I had an opportunity to speak in the department. I said, come to the present market value or come to the present living standard. 1970s is very different. 100 rupees. Come to the present market value or come to the present living standards and say 100 rupees per child for maximum of 2 children per spouse. So much the living standard also has changed. You have not changed the law. Okay. Second is maintenance of books. You know who has to maintain book? If your income exceeds 1,50,000, if your receipts exceed 1,50,000, you mean, and your basic exemption limit itself is, and if your receipts exceeds 150, you have to maintain books. And the second paragraph is furthermore jovial, that where the receipt does not exceed at 150, maintain sufficient records to prove your income. So no point in studying those things. I have never seen a question. Let's go to 44AB, mandatory audit. Section 44AB, auditor's boon section, mandatory audit. Okay, I divide it between profession. As I am writing, it's a very smaller column. Business, it's slightly larger. Okay, profession, business. Interestingly, my dear friends, how do we differentiate between profession and businesses? By the words they use. Gross receipt. That means they are talking about profession, because professionals account for only on cash basis. Gross turnover. That means they are talking about business assets. Where gross receipts, exceeds 50 lakhs. Mandatory audit if the gross receipts exceed 50 lakhs. Where the gross receipts exceed 50 lakhs. Am I clear to you? Okay. Now let me focus on business. Let me focus. This is for profession, where the gross turnover exceeds 1 crore. Where the gross turnover exceeds 1 crore, you have to get your books audited. And then came this cashless economy provision. Then came this cashless economy provision, where receipts otherwise than by approved modes, where receipts otherwise than by approved modes, which are cash, bearer check, cross check. Okay, where receipts otherwise than by approved modes does not exceed 5% of total receipts and which means both has to be fulfilled, where payments otherwise than by approved modes does not exceed 5% of total payments. Both the condition needs to be fulfilled. 10 crores. The limit becomes 10 crores. Where receipts, I never said only revenue receipt. I said all receipts put together. Does not exceed the unapproved modes of receipt does not exceed 5%. Unapproved modes of payment does not exceed 5% of total receipt or total payment, as the case may be. If that is fulfilled, you need not get your books audited up to 10 crores. Okay. Audit by a CA. Form 3CD needs to be answered by CA.
FM doesn't like charge.
Huh?
FM doesn't like charge.
Sir?
It is up to 10 crore or it is not required?
Not required, sir. Limit is 10 crores, sir. Only if it exceeds 10 crores. Clear? Form 3CD needs to be answered by a charter. Okay. And we also know that the due date becomes 31st October. Not only in this case, wherever the audit is mandatory, the due date becomes 31st October.
They never give extension for 42.
Yeah.
Give for filing returns they give.
Yeah,
For due date. Extension.
Yeah. For only for
Points.
July it has been given. I hope they will give it to you very soon. Am I clear? Preeti is carrying on, question number 26. Preeti is carrying on textile business and the total turnover of the financial year is 9 crore 50 lakhs. In the following circumstances, She seeks your advice on whether the books needs to be mandatorily audited. If the whole of the turnover is through approved banking channel, and so are the payments.
Realistically, how can we verify which cost to check our account paying? As well remove the cost.
Yes, sir. We have to get the details from the bank, etc. It is not possible. That's why we write a statement in the form 3CD that it is to the extent we have checked, etc. and all. If 90% of the turnover is through approved banking channel and 10% is through cash. If 95% of the turnover is through approved and 5% is through cash.
turnover is not exceeded.
Hmm?
Actual turnover is not exceeded.
No, has not exceeded. If the whole of the turnover and 90% of the expenditure is through banking channel. Homework. All the three homeworks today are mandatory. All the three homeworks of today are mandatory. The next homework is going to be the one presumptive computation question. The last of the section areas. After that, we'll go to ICDS. I am not going to take section 40B here. I will take it along with firm. All the non-resident presumptive computation in the non-resident. The exam itself is split like that only. So we will take it in the non-resident. Presumptive computation.
Limit extension for profession.
Sir?
No limit extension for profession.
No limit extension for?
44 AB and professionals.
Yes, sir. Yes, sir. No, no. No, sir. No, sir. But it is indirectly coming in presumptive computation. Okay. Presumptive computation. Presumptive means on the basis of assumption. Presumptive means on the basis of assumption. Income will be computed on the basis of assumption. There are three sections: 44 AD, 44 ADA, and 44 AE. 44 AD, 44 ADA, and 44 AE. Okay, focusing on 44 AD. Focusing on 44 AD. Small business. What is the difference between business and profession? The word. Turnover means business. Receipt means profession. Okay, small business. Turnover does not exceed, okay, 2 crores. Small business, which means the turnover has not exceeded 2 crores. Small business, which means the turnover has not exceeded 2 crores. Am I clear to you? Okay. Cashless economy provision comes here also only for receipt, not for payment. Okay. Where receipt otherwise than by approved modes does not exceed 5% of total receipt then 3 crores. Then 3 crores. You can go up to 3 crores. Then you can go up to 3 crores. Are you understanding? Okay. Income 6% of gross turnover, okay, by approved modes plus 8% of others, that is non-approved modes, otherwise than by approved modes. Okay, okay, right? Profession. Gross receipt does not exceed 50 lakhs. If the gross receipt does not exceed 50 lakhs. My dear friends, same condition, 75 lakhs. My dear friends, same condition, 75 lakhs, where receipt otherwise done by approved mode does not exceed 5% of the total receipt, 75 lakhs. So Rajgopal, here they gave the relief, 50 to 75 extension, indirectly they gave. Okay, okay. Income 50% of gross receipts. Income 50% of gross receipts. Flying of goods vehicles, flying of goods vehicles. Sometimes the word goods becomes silent. People use passenger vehicle also for this section, but technically it's for goods vehicle. Assessee should not own more than 10 vehicles at any time during previous year. Assessee should not own more than 10 vehicles at any time during the previous year. At any time during the previous year. Okay. That is why in 194C that benefit. Okay. Income for HCV for heavy commercial vehicle, ₹1 per kg per month or part thereof. ₹1 per kg per month or part thereof. Or part thereof means even one day will be taken as 1 month. You purchased it on July 31st, I will compute for July also. ₹1 per kg per month or part thereof. Non-HCV rupees.
The voice is breaking, sir.
Non-HCV rupees 7,500 per month or part thereof. Non-HCV rupees 7,500 per month or part thereof. HCV means 12,000 kgs or more. HCV means 12,000 kgs or more is only regarded as HCV. For that only this particular benefit.
kg is on the
Weight of the vehicle, 14,000 kgs, 14,000, irrespective of what you carry.
When the vehicle is, you have to pay 1 kg, 1 rupee per kg.
Income is computed accordingly. Common points. Common points for all three. Common points for all three. 1. Where assessee wants to declare a lesser income, maintain books and get them audited. Where assessee wants to declare a lesser income, maintain books and get them audited. So assessee should feel it is better to pay tax than to pay audit fees. Okay. Point number 2. 5 years lock-in period. If the assessee exit within 5 years, no re-entry for next 5 years. Exit within 5 years, no re-entry for next 5 years. Third, under 44 AD and AD.
Second point again, sir.
Yeah. 5 years lock-in period where assessee exit within 5 years, no re-entry for 5 years. Third, under 44 AD and ADA, only last installment of advance tax is applicable. It is enough if you pay 15th March. Of advance tax is applicable. Read through. Read through once. Yeah, 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 yeah.
AD and AE not available for Olympic body corporate.
Yeah, yes, sir. LLPs and companies. Presumptive computation is not, because books need not be maintained is the provision. Whereas company law, you cannot overrule company law. Company law and LLP law says books are mandatory. So LLPs and companies cannot avail this.
And this lock-in period, it is only for the first 5 years. Once you complete 5 years, you can enter and exit.
Yes, sir. I mean, within that you would have crossed the turnover. That's why they are keeping like that. Yeah. I'm in question number 28. Question number 28. Praveen, engaged in retail trade, reports a turnover of 1 crore 98 lakh 50,000 for the relevant financial year. His income from the said business as per books of accounts is 11 lakh 20,000. All transactions are carried out by approved modes. Is Praveen eligible to opt for presumptive computation? If so, determine his income. What will be the income if 50% of the turnover is through approved channels and 50% otherwise done by approved channels? in case his turnover is 2 crore 98 lakh 50,000, out of which 12 lakhs is by means of cash and the balance is by approved mode, specify the provision and income if the actual profit is 20 lakhs.
Yes.
Case D, sorry. In case he has not opted for presumptive taxation, what is his obligation? Profits as per books in the beginning itself, they have given 11 lakh 20,000.
If the assessee opts for presumptive, there is no question of assessment at all.
No question of assessment, no question of disallowance. If the assessee has not deducted tax at source, 30% disallowance is not there, 40A3 is not there, 43B is not there. May I know the answer? 12 lakhs divided by 298.50 into 100 as a percentage. 4.0.
4.02.
Am I clear? Anybody still writing? Twenty-ninth, forget that question. 30th is the homework. These three are the homework question. Okay. 29th, forget that question. 30th is the homework question. We will meet after the break to start with ICDS. We'll meet after the
30
break
minutes.
to start with ICDS.
Half an hour.
10:30, 10:35 we'll be back. Income computation and disclosure standards. ICDS stands for income computation and disclosure standards. Okay. Okay. ICDS is for income, stands for income computation and disclosure standards. This is applicable for books, okay, maintained under income tax law. This is applicable for books maintained under income tax law. This is applicable. No, I don't want you to write this alone. Leave it to me. I'll take it. This is applicable for books maintained under income tax law. Okay, sir. Sir, have you seen books of accounts under income tax law? Have you seen books of accounts under income tax law? Rajagopal, have you seen books of accounts under income tax law?
And computation.
Okay. Yes, you have seen.
P&L.
Yes, you have seen. Nothing but that one statement. Statement of income. Add inadmissible expenditure, where we add back the depreciation also. Less allowable, okay, expenditures and allowable depreciation under IT law. Take the other incomes out. That is known as books of accounts. We always feel books of accounts means debit credit. Income tax law, books of accounts is statement of income, memorandum of income, whatever you call it. That is income computation. Where is this disclosure? 3CD. This disclosure is in form 3CD. Okay. We answer many questions, which includes ICDS questions. Okay. Whatever is our previous senior answer, we answer the same thing. But without knowing that it is part of ICDS. Okay. But this is disclosure. Disclosure is in ICS. Income computation is in that sheet, and this is applicable for books. Friends, I don't want you to write. Listen to me. There are 10 ICDS. 10 ICDS. One adjustment from ICDS will come. Majority of the time, Forex, borrowing cost, okay, asset put to use, okay, subsidy, wages, that I'll teach you. Majority of time is this only. Inventory. Okay. Remaining 5 ICDS are slightly taking up.
Or extra 43.
Yes, sir. That is also as a standard, as an ICDS. That's why I said from ICDS we are moving everything to law itself nowadays. Let me start with ICDS 1. And ICDS is not applicable for MAT and AMT computation. It is only for that one sheet. Okay. And if the income is, if it is not a tax audit case, no ICDS. Let's take ICDS 1, which is equivalent to AS 1. Okay. Mandatory accounting policies or a fundamental accounting assumption. What are all they? Going concern, accrual, consistency, materiality, prudence. Substance or prudence. The last two are cut. Materiality is especially cut. See, in a 100 crore transaction, 1 lakh is not material for you in accounts, but that is 30,000 of tax for me. That is 30,000 of tax for me. So materiality will not be there. Okay, my dear friends. Okay. Okay. Going concern, material, mercantile basis. Concept of materiality, prudence not applicable. Accounting changes. Okay. Your accounting standard says accounting policies will be changed where the new policy is more relevant, whereby adopting law, change of law, etc. and all. We have a very simple statement. Accounting policy changes if there is a reasonable cost. What is reasonable cost? Accounting policy changes if there is a reasonable cost. Okay, sir, what is reasonable cost? Accounting policy changes if there is a reasonable cost, which means reasonable cost is not defined. Reasonable cost is not defined. If there is a reasonable cost change. Okay. So from the examination perspective, not at all and standard to be tested. Now let's go to AS2, which is also ICDS2, but with a change. It is applicable for raw material, finished product, okay, everything, work in process, all these things. And interestingly, in income tax, this is also for performance of service, which is the missing terminology in AS2. There is a vehicle which met with an accident in the month of March 25th. Taken to the showroom. It will take 10 days to 15 days. In between, March 31 comes. There has been a service performed on that vehicle, okay, which needs to be shown as closing stock under income tax law. Okay. So, held in the ordinary course of business, work in progress, materials, consumables, used in the process of performance of service. That is some change. Cost or net realizable value is the same. Purchase price, conversion price, variable and allocated fixed overheads will not include taxes if input credit can be claimed. And then comes the most important second change. Borrowing cost will also be capitalized, will be added to the inventory cost if the inventory is going to take more than 12 months. Wine of liquor industry. Longer the gestation, greater the value. Okay, right? So, for that, if I incur borrowing cost, 2 years, 3 years, it is going to be fermented. That borrowing cost will be capitalized with the cost of inventory. the ISRO projects, I don't say it's inventory, but if they use it, whatever is they used as inventory, if it takes more than 12 months, it will be considered as part of conversion and it will be added. Borrowing cost. Less than 12 months will not be added. Twice or thrice questions have come. Interest on opening stock and closing stock has been added. Interest on opening stock and closing stock has been added. Okay, has been added to the, since the stock will take 8 months, we have to remove it. We have to remove it. Are you understanding? We have to remove it from the inventory. Okay. Interest has been charged to P&L, but the closing stock might take 15 months. I need to disallow it and add it to the closing stock. So this is.
So the stock will get ready.
Yes, sir. And the next important thing to understand is, in case of a firm AOP, BOI under dissolution, inventories will be valued because going concern is not there. Since going concern is not there, it has to be valued, inventory has to be valued at net realizable value, at NRV. Inventories will be valued at NRV, no more cost or NRV, whichever is less, NRV, if the organization is under dissolution. Last question, last May question. Okay, the three partners. I will show you that question. We have worked out in the classroom. Repeated the same. Okay, right. Okay, listening only. I don't want this 3 pages is more than enough for ICDS for the questions we asked. ICDS 3 is on contract. ICDS 3 is on contract. What is that? Percentage of completion method. It takes how on the basis of expenditure we take. It takes 5 years to complete this project and 5 crores. This year I have incurred 2 crores. 40% of the expenditure is over. 40% of the income should be accounted. Percentage of completion method. I will be able to sell it for 7 crores. 2 crores, 7 into 40% will be the income. Percentage of completion method is the method. In this, the most important 2 things which we are now going to understand is, what is early stage of project? Okay, up to 25% early stage. Up to 25% early stage, where expense is equal to income. I'm not saying you can book loss. If the 5 crores total project, only 1 crore completed, you need not 20% is only computed. You need not put 7 crores into 20%. Income is also 1 crore. Income is also 1 crore. Expense is equal to income. Before introduction of ICDS, there was something known, always there is something known as retention money. 7 crore project, 10%, 70 lakhs they will retain and will be paid after 2 years, 3 years if the project is successfully performing. Before ICDS introduction, retention money will be accounted only in the year in which it is received, because there is always a risk. There is always a risk. ICDS says there is no risk. Retention money will also come under POCM method. Now retention money cannot be deferred. Now retention money cannot be deferred. Only POCM. Even retention money comes under the principle of POCM. That is, if retention, in other words, retention money will also be treated as income and accounted for. It will not be deferred. Early stage means 25%, where income will be accounted on the direct basis. You know, I told you section 43C. It's now incorporating these things in section 43C. Am I clear? Okay. One is accounting.
The early stage alone, can you repeat?
Early stage is 25%, sir. Up to 25. Yeah, up to 25% level, sir. I will not be able to say exactly what will be, whether at what stage, etc. So the law gave me one benefit. Up to 25, you need not book any profit. At the same time, you cannot book loss. So expense, 1 crore expense has been made, income is equal to 1 crore. So that neither you need to pay tax nor there is any carry forward of loss. Okay, friends. Okay. ICDS 1, accounting policy. 2, inventory. 3, contracts. 4, revenue recognition. Sale on the basis of risk and reward being passed on. Same. Services. First, let me take up the easy. Risk reward. Interest only on time basis. Royalty on the right to retain, receive. Dividend on certainty. Okay. All these things we all know. Interest is on accrual basis. Royalty is definitely when the right to receive is there. And dividend, once they declare it and pass it in the AGM, almost on receipt basis only you can recover dividend. For services, again, percentage of completion method. For services, again, percentage of completion method. However, if the service period is just 90 days, full completion method. However, if the service period is just 90 days, then full completion method. You need March 1st, I am starting a service. April 30th, I am closing it. Record the entire income in the next year itself. No problem. No problem. Anyone inventory accounting standards take, I mean, ICDS takes, ensures that you are taking it as closing stock, whatever is the work performed. Where the services are indetermined, straight line basis. What do you mean by indetermined? Prepaid cards, 90 days. Can you tell me how much you will use this month? How much you will use next month? 90 days you got a prepaid card. The subscriber's usage will never be known to the mobile company. So they said on straight line basis. Every month equal amount you distributed on straight line basis. Revenue is recognized. Okay. In this, the last 3 alone, be sure about it. The last 3 alone, be sure about it. Sorry, sir.
The last where the
No, sir. இது வந்து hyphenated words. Sorry, sir. இல்ல, my mistakes. Shall I? Friends. Fixed assets. Okay. Normally, machinery spares are treated as expenditure. Where it is of unique nature, it will be capitalized. Same. If it is a unique spare part, which is rarely available, which will be rarely utilized, that is capitalized. Otherwise, general consumables, take it as expenditure itself. Where I give this laptop and buy a new laptop, the value to be recorded is always the receiving asset, the new incoming asset. The value to be recorded is incoming asset. Same for shares also. Where shares are allotted, the value to be recorded is incoming asset. Am I clear? Okay. Once more repeating, sir. 1 is accounting policy. 2 is inventory. 3 is contract. 4 is revenue recognition. 5 is fixed assets. 1 and 5 are little dormant. Okay. In 2, there is a question. There can be questions. In 3, retention money, please remember. In 4, service sector, please remember. 5 is dormant. 6 is already studied by us. 6 is already studied by us. Forex. 7 is already studied by us. Subsidy. In case of depreciable asset, adjust it with the cost of the asset. In case of non-depreciable asset, treat it as income. Any other subsidy, general subsidy.
So what is break?
Sir, your screen is not visible and voice is breaking, sir.
Screen also not visible. Huh? Yeah, friends. So, government grant, we have already seen. For depreciable asset, adjust with the cost of the asset. Non-depreciable income, general subsidy income. It will be recognized either at the time of receipt or at the time of fulfillment of condition, whichever is earlier. It cannot go beyond the year of receipt. It cannot go beyond the year of receipt. And where the subsidy is refunded later, it will be treated as expenditure if it is these two subsidies, and it will be adjusted with the cost of the asset if it is depreciable asset. I mean, whatever was the original treatment will be the same at the time of reversal also. Whatever was the original treatment will be the same at the time of reversal also. Okay. Okay. That is 7, government grants.
For the amount first depreciation will be allowed.
Once more. Yeah, depreciation will be allowed. Yes, sir. Yes, sir. That doesn't.
For the amount that is being reversed.
That will not, for the amount it is reversed. After reversal, whatever is there on that you can claim depreciation. In the past you have claimed for the full amount, that will not be reversed. Don't worry. Okay. Now.
WDV is less than the.
Sir, here it will increase the value, sir. Refund will increase the value. ICDS 8 securities equal to accounting standard 30. Okay. Current investments. Okay. Valued at cost or net realizable value, whichever is less. Cost include all expenses at the time, and net realizable value will be sale price minus expenses. May I? May I? I want you to understand here. Of course, I have not seen question, but still. I have debenture of company A, debenture of company B, company C, company D. Okay. Purchase price, fair market value, 100, 120, 100, 80, 100, 100, 100, 90. Accountancy. Accountancy says 100, that is AS 13, 80, 100, 90. Okay, 280, 370. Are you understanding? Okay. Income tax law says 400, 200, 300, 390. Whichever is less, 390. Investments of the same nature will be grouped together and cost or market value will be identified for the group and not for the individual investment. So equity shares and all, one group. Preference shares and all, one group. Debentures, one group. Bonds, one group. So to easily understand.
At the end of every year,
At the end of every year. Yes, sir.
Yeah, for every year.
31st March, sir. Yes, sir. To easily understand investments also, block of investment concept. We don't do for individual assets. We don't do for individual investments. Okay. Under ICDS, investment securities will be grouped and the measurement will be done in the total value and not on independent securities. Fee for weighted balance and borrowing cost. ICDS 9, borrowing cost. Inventories more than 12 months. Other borrowing costs till the date of putting the asset into use. For inventories up to 12 months. Other borrowing costs till the date of putting the asset into use. There is in accountancy, there is a term called temporary suspension of activity. Qualifying asset. Temporary suspension of activity. That is, in between 4 months flood, I am not performing any activity. That 4 months interest should be taken to P&L account. Because I have not. In income tax law, there is nothing like that. No, boss. There is nothing. Okay. Capitalization commences on the date of borrowing and goes on up to the date of putting the asset into use. No concept of suspension of activity. Accountancy tells, in between period, if you use the borrowed funds and earn interest, reduce it from the cost of the asset. No, sir. You pay tax for that separately. Let us not confuse ourselves. Okay. Income tax law say any income arising will be treated as income and will not be adjusted with the cost of the asset. And you all know, if it is a general IFOs, very good, sir. If it is IFOs, sir, surplus funds. If it is a general loan, total into qualifying asset divided by total assets. So borrowing cost is a question, sir. Borrowing cost is a question. Always many questions. And the last is, this is the only standard which favors the assessee to an extent. Normally, provisions are not allowed as deduction. But where provision is on a reasonable basis, scientific basis, based on past experience, the same will be allowed. Like provision for guarantee, provision for wage revision. If it is done on a scientific basis, if it is done on the basis of past experience, it will be allowed.
But provision for gratuity also will be allowed separately.
No, yes, sir. But 40A is a specific section. 40A7 is a specific section which says I will not allow it. Whenever ICDS and clashes, law will prevail. With regard to standards ICDS, while doing questions, you will understand what type of one adjustment in the question will be ICDS. Friends, with this, the theoretical area of PGBP gets over. One of our friend asked me, are we going slow in direct to examination class? In yesterday, the friend texted me. I want to again tell you, if you feel we are going slow, I'm only doing PGBP very lengthy because this is going to travel with us throughout. This is going to travel without throughout. Okay, lifelong also, yes, I go with you. But beyond that examination, I mean, till the last chapter we complete PGBP. So, taking PGBP, don't judge it. And my intention is not to go fast. Okay, whatever we understand, we will understand completely clear so that we are able to crack the questions. Again, for ICDS related questions, I will provide you the answer. This is just, I will provide you the answers. Okay, today I will provide you the answers. I will send you the answers for this. Chuma filling the blanks questions only. I will provide you the answers for these things. Okay. how to write the answer. Okay, how to write answer. This is where I am going to make a lot of things. That is, we will write once the answer well. Subsequent question and all we will refer to. Okay, so if a 43B disallowance comes, what should be the words that we should use? We will write it. Subsequently, we will write 43B disallowance. You know what words has to be written. Okay, so that is where I am trying to save on time. That is where I am trying to drive it. But first, these questions I want to answer. Question number 31, comprehensive questions. Question number 31. My page number is 26. Your page number, physical copy page number 25. Shall I? Okay. A company receives 10 lakhs for agreeing not to carry on any business relating to software for the next 3 years. Huh? Once more, read it. You will hit it. Not to carry on any business. Non-compete. Compensation, correct. But that is the fourth wing of compensation. Non-compete fees. Okay. Secret commission paid. Secret commission means the details of receiver is not mentioned. This takes the character of illegal payment.
Sir, one doubt.
Hence, disallowed.
Sir, non-compete fees will be considered as a income for receiver. Is it allowed as a deduction for payer?
Yes, 194J specifically says for non-compete fees 10%. So you can understand it is specifically allowed.
Okay, okay, sir.
Okay. So when we are doing the main questions, no, if I find secret commission, I'll just write secret commission disallowed. The wordings you have to write is this, or I'll just copy and paste it there. Okay. Sales commission paid to a non-resident who acted as an agent for booking orders from various customers who are outside India. Will section, you want time? Yeah, this question, write it deeply so that many things we'll refer to. Yeah, it will be so. I understand. Hand will pain, fingers will pain. Yeah, I'm bound to do that. I'm happy I'm doing it. Huh? Yeah, I'm sure at the we are definitely completing the question paper. Yeah, I know that. Yeah, I want to make you right. It is very easy for me to type the answers and give. I have every answer for it, but that's not my intention. You're right. That's nothing wrong. Once I shook the hand like this, for this you are speaking so much, is what you are thinking, is what I am doing. Will section 43B get attracted for bank guarantee given towards disputed? Yes, friends, it will be disallowed. Bank guarantee does not mean you have paid. Bank guarantee 43B is clear. It should be paid. Providing bank guarantee, 43B will get attracted, which means it will be disallowed. I understood that you found the words different. Gets attracted means you will get disallowed. That's what it means. Will section 43 be applicable for interest payable to GST department but not paid before the due date? Yes. The term tax also includes interest and other payments under the respective law. Normally, GST interest will be allowed as deduction. However, if it is not paid within due date of filing returns, it will be disallowed under section 43B. Interest was pending to a financial institution which was settled by issue of debentures. Very good. Disallowed. 43B clearly uses the word paid. If it is not paid, okay.
If these debentures were convertible debentures and they converted into equity shares, they considered as nothing.
Never it will be allowed. The word paid is the superior word.
Sir, wherever interest will come, it's allowed only on payment basis, right, sir?
Interest to banks and financial institutions. Yes, friend.
Okay.
Only on payment within the due date, not within the same year.
Okay, sir.
Can the successor of business write off the debts which were incurred by the predecessor? Rajagopal, you are answering this question also? Or you are asking me this?
And answer. Should be allowed, right?
Yes, yes. Okay, please remember these findings. Provisions will apply to the transferee entity as it would have applied to transferor had the event, that is succession, not taken place.
And whenever we say taxes, all municipal taxes are also included, sir.
Yes, sir. Any taxes payable to government. I'll give you a value added answer for your statement, sir. Municipal taxes for a business asset is covered under 43B. Municipal taxes for a house property is covered under 23. 23 says it should be paid within that year.
Okay.
It is not a due date of filing returns. If municipal taxes are paid in that year only, it will be allowed. Whereas 43B, which means for my residence, if I want to claim, I should pay within that year. For my office, I can claim up to October 31st.
But with respect to interest on accrual, it is allowed at 20.
Yes. I want you to answer. Rate of interest is 8%. I missed to mention the rate of interest, I believe. 8%. I want you to answer. Yeah, 8 by 12. 70 lakhs into 8%.
8805 please what you have.
Sir?
8805 8 months.
No, sir. The answer is there in your screen. Can you please check?
Sir,
Yes, Shan.
yeah. So why we have taken 8 months, sir, instead of 9? Like,
1st
machine was ready
December.
from use.
1st December.
Okay. Okay, sir.
April to 1st November is 8 months.
Okay, sir.
May I?
So the interest is 4052 payment. 100,000 into 76 into 8 by 100 into 8 by 12.
70 lakhs is the loan amount into 8%. I didn't give you the percentage, I said that. Into 8 by 12.
70 lakhs.
Loan amount is 70 lakhs.
April.
May I? Dynamic Limited, an Indian company, took on lease a commercial premises for its operation. After some years, the company decided to vacate the premise and relocate for a new location. However, dispute arose with the lessor regarding the terms of vacating the premises. To resolve the dispute and avoid a prolonged litigation, Dynamic Limited agreed not to claim the security deposit of 3.4 crores it had initially paid to the lessor at the start of the lease. Whether the amount foregone will be allowed as a deduction against business income. Mahale Anand filter. Okay, it is a capital loss. Okay. Complete the rest of the name. Limited, some things will come.
All these are Supreme Court judgments.
Not necessarily, sir. Apex court judgment. This is not an apex court judgment. Apex Laboratories, Saurashtra Cements Limited, Honda Steel. Those are only Chennai Properties and Investments Limited. So, preferably, if you are not very sure, held by the court is a sufficient terminology. Amount again Examine the taxability or allowability or otherwise in the following cases while computing the income under PGBP to be declared. Amount received as power subsidy according to ICDS 7, accounting policy 1, 2 is inventory, 3 is contract costing, 4 is revenue recognition, 5 is fixed assets, 6 is forex, 7 is government grants, 8 is securities, 9th is borrowing cost, 10th is provisions and contingencies.
Respect the government grants reducing from the cost of the asset is only for depreciable asset.
Yes, sir. Very good.
We cannot do it for land. Also.
No, sir. No, sir. No. Donation received by a person carrying on vocation from his followers.
Yeah.
Yes, he is right. It is Nityananda's case. It's not a recent case, though. Interest received by a contractor on the amount of compensation awarded by arbitrator resolving the dispute relating to work done. Friends, where the interest is related to the business. Two case laws we have seen, K and Co. For obtaining bank guarantee, I put the margin money. The interest is a business income. 2. Sri Rama Multi-Tech, where share application money kept in a separate bank account is available towards share issue expenses. So, in those case laws, it is said, where the interest is surplus, I accept it as a, where the interest is in the course of carrying on of business, it will be considered as a business income. It will be considered as a business income. Am I clear to you? Okay. Interest on margin money deposited. Am I clear? Okay. We stop here. Tomorrow, we are completing PGBP in the first session, starting with the introduction of capital gains in the second session. Meet you tomorrow morning, 6 o'clock. All the best, my dear friends.
Thank you.
Namaste. Good morning. We have been discussing on PGBP on the various aspects. We completed the provision. We go ahead and do some questions now. As I told you, PGBP goes till the end. So the chapter never stops. We are going to do some sample questions now with an assurity that we are going to do more as we enter assessment of firm, companies, cooperatives, like that. It goes on and on the chapter. Okay. I'm starting with question number 33 in page number 27 for physical material, 28 for online material. The profit and loss account of Messrs. Suchitra Food Specialities Limited disclosed a net profit of 79,40,800 after taking into account the following. Compute the taxable profit of the entity. The company has been split into various departments and units. During the previous year, the company closed down its soft drink manufacturing unit due to lack of possible profitability. Employees are paid severance cost, which amounted to 1270. The company has debited the same in the P&L account. Training expenses paid to joint venture company, 53 lakhs. So the severance cost is nothing but retrenchment compensation. So it is allowed. It is allowed, retrenchment. Only VRS compensation needs to have amortization. Retrenchment is allowed. Training expenses paid to joint venture company, 53 lakhs. These employees are trained by the joint venture company. Please remember, it is allowed. Okay, joint venture company. We are talking about 48 related party. And we have to, unless the question specifies the fair market value, we have to assume that it is within the fair market value and allowed. 2,45,000 fees paid to director's son for higher education by entering into an agreement with the son of the director that after the course he needs to serve with the company for 5 years. No such expenditures are not incurred in the past. XJ Forgings. XJ Forgings, where the director's son is the only or the first beneficiary. It will not be allowed. 11 lakhs for commission was paid by the company to its directors as he has given a personal guarantee. Allowed. Later a case law will come. As of now, allowed. Company has incurred 9,40,000 towards replacement of dies and molds. TVS Motors. Replacement does not bring a new asset into existence, so it is allowed. Depreciation as per books, depreciation as per IT law. The company has incurred 8 lakhs towards issue of convertible debentures. These are to be redeemed after 5 years. ITC Limited. Okay, ITC Limited. Okay, it is allowed. Okay, there is no amortization requirement. Company has a brought forward law of 16 lakhs entirely pertaining to the software link unit.
Brought forward was entirely pertaining to plan.
That is, if you maintain separate sets of books, which sometimes it is possible, it is allocated to that unit. The question is given with an intention. In income tax law, a set of losses, there is a very clear principle: loss of a closed down unit can also be carried forward and set off. For that only this question is given.
Coming to the 1840 case, ಅದು ಡೈರೆಕ್ಟ್ ನೋಟಿಸನ್ ನಮ್ಮ ಕೂಡ 270
Allowed. Severance cost. Paid to employees of a closed down unit is allowed as it is an expenditure incurred in the normal course of business. For all those expenditures where there is no specific provision or where there is no specific case law, use the terminology expenses are incurred in the normal course of business.
Retrenchment cost allowed as per section 37.
Which one, sir?
Retrenchment cost.
Allowed.
Allowable expense.
Yeah. 37 does not have a specific provision, but it is allowed. Can I? No. I want you to understand this, though the case pertains to deemed dividend, I just want you. A director has given a personal guarantee. That is, when the others are not given it, the directors have given, this particular director has given a personal guarantee. Can there be a special payment to him? Yes. Yes, commission paid to a particular director, which has not been paid to the other directors, because he has provided personal guarantee, because he has pledged his house or something like that, is allowed as an expenditure. There is nothing wrong about it. Hmm? Director?
Is he not a related party to the
Yeah, true. But it is not, that's what I'm saying. It is paid because he has provided some extra benefit to the company, which others have not provided. So there can be a payment to him. Suppose if he has not provided that and you pay commission, then you will see whether 48, whether he has performed any job, etc.
Only the stated we are assuming 194J TDS.
Yes, yes. No, join us in the next question. That's better. May I? May I? RST Limited is engaged in the business of manufacture. So, if at all additional depreciation comes or skill development comes, we need to remember. And sale of drugs and pharmaceutical. The profit and loss account for the year ended is 28 lakhs. Income tax paid on non-monetary perquisites disallowed. Any income tax is disallowed. Any type of income tax is disallowed. Legal fees for defending the title of factory premises. Normal course of business allowed. Expenditure on scientific research, in-house research approved by the prescribed authority allowed. Interest paid on arrears of GST allowed. Remember, interest is allowed. Okay. Yes, sir.
Tax paid to non-monetary
Of the employees.
TDS. Allows.
No, it's not TDS. It is perquisite provided to the employee for which tax is borne by the employer. Not allowed. Cash payment of 60,000 made on 10th October to a supplier towards purchase of raw material. Of this, 30,000 pertains to payment against invoice for the financial year 23-24. My dear friends, this provision, this adjustment covers both 40A3 and 40A3A. Totally, I have paid 60,000 entirely cash. 30,000 belongs to the current year, disallowed. In excess of 10,000, the entire amount. 30,000 pertains to the last year, it should be treated as income because expenditure is not there in this year to disallow. 40A, 40A3A. Okay, 30,000 pertains to the last year, disallowed. Treated as income. 30,000 pertains to the current year, which will be considered as disallowance under 40A3. Amount payable for usage of railway facility, out of which 650 is paid within the due date and balance was paid after the due date, it should be disallowed 43B. 43B. Rent received for letting out of vacant land 1 lakh. Okay, this should go to IFO. Yes, we call it as ground rent. Ground rent. Arrears of rent received in respect of house property which was let out in earlier year, which was not charged 2 lakhs. The said property was already sold. This should go to IHP. The company has paid a royalty of 3 lakhs on in the financial year 23-24, which was disallowed by the AO since the tax was not deducted thereon. The company deducted and paid the tax at source during the current year. So whatever was disallowed earlier will be allowed now. Whatever, okay, default rectification provision. Okay, 2 types of rectification. One, proof submission, or where the other person specifies that, okay, we are deducting it now, then it will be allowed. The company has brought forward loss from house property 40,000. Compute the total income. Furnish explanation for the treatment. Read through.
Now, on what is paid to the employee is income to the employee, correct?
Is an income to the employee, yes.
Then why should the company, even if the company bears the income tax audit, it will be, the income tax will also be.
Income tax will never be allowed, sir.
The employee only.
Sir,
And why will the
yeah, I am explaining you. Sir, any expenses incurred towards perquisite allowed for the company. Tax is never allowed. Tax is never allowed as a deduction. Income tax is not allowed. Even for the, you say, sir, this will be considered as an expenditure of the company, expenditure of employee met by employer. So it will be anyhow taxable in the hands of the employee. It is a dual taxation. I agree with you. But income tax on non-monetary perquisite is never allowed. Perquisites are allowed. Income tax on non-monetary perquisites not allowed. 48, specific provision.
So it should not be considered as serious in the first place.
No, sir, it will not be considered as tedious. Remember, whenever we write a 40A3 adjustment, 75 to 80% of the question will have 40A to 40A3 adjustment. The wordings you have to write is according to 40A3 on a single day to a particular, if the payment exceeds 10,000 and made otherwise than by approved mode, then the whole of such payment is disallowed. This is a standard statement after that about that particular payment. Amount payable for you. Yeah, we continue. Yeah. According to section 40, any which is outstanding or should be paid on or before. Okay. Payment for usage of railway assets is a statutory payment. Amount unpaid within due date shall be disallowed and allowed in the year of actual payment. So actually out of 9 lakhs, 650 is paid. So 9 lakhs minus 6,50,000. Shall I, friends? Shall I? Okay, just a recollection. That is these type of chapters like house property we'll do as the some question goes by.
Sir, your voice is not audible, sir.
Is it so for everyone? Is my voice not
Sir,
audible?
you are muted from your end.
Is my voice now audible?
Yes, sir, it's audible. Thank you.
House property. Okay. Arrears of rent received. This is according to section 25A. It is taxable in the year of receipt even if property is transferred before that date. $40,000, there is a brought forward loss. Shall I, friends? Shall I? ILT Limited is engaged in the manufacturing of pipes and tubes in West Bengal. The company has made a net profit of 9 crore 5 lakhs before depreciation. The following are the particulars furnished. You are required to compute the total income indicating reasons. A group-free air ticket was provided by a supplier for reaching a certain volume of purchase. The same is encashed by the company 10 lakhs. The encashed amount is adjusted with the reserve. No, section 28 says even perquisites are treated as business income. Section 28 says perquisites are treated as business income. Okay, whether convertible into money or not. Here I have received it in money, so it is all the more. A regular supplier of raw material agreed for a settlement of 8 lakhs instead of 10 lakhs for poor quality of material supplied during the previous year, which was not given effect to in the running account of the supplier, deemed income. Deemed income, right back of creditors, deemed income. Andhra Bank sanctioned and disbursed the term loan for the financial year for a rent of, for a sum of 50 lakhs. Interest of 8 lakhs was in arrears. The interest was cut. So this 8 lakhs would have been already disallowed. Please remember. This is arrears of interest of the preceding years. 43B would have been applied. It is already disallowed. The interest has been converted into a new loan repayable in 10 equal installments. During the year, the company paid 2 installments and the amount was reduced from the balance sheet. Obviously, in the books of accounts, they will do so. But as per our income tax law, whatever has been paid should be allowed. Whatever has been paid should be allowed. Whenever it is term loan, it is converted into term loan, installments paid will be allowed. The company remitted 8 lakhs as interest to a company on a loan taken 2 years back. Tax was deducted but deposited only on 15th December. 40A, 100% disallowance. Liquidated damages of 3 lakhs was received from KS Limited for delay in supply of plant and machinery and has been shown as other income in the P&L account. Saurashtra Cements Limited. Any compensation, liquidated damages towards an asset should be reduced from the cost of the asset. Sandeep, a sales executive stationed at New Delhi, was on an official tour to Bangalore during a period of 31st May to 18 June, 28th September to 15th October for business. The company has paid Sandeep's salary in cash from its local office, 25,000 at allowed Rule 6DD exemption, where an employee, okay, has been temporarily posted outside the base location, it can be paid. The company also paid cash of 40,000 to an employee at the time of his resignation, Rule 60D. Up to 50,000 allowed. Up to 50,000 allowed. The company has taken up initiative to restructure its working capital debt and paid 20,000 prepayment premium allowed. As per the scheme, 50,000 loan was waived and the company credited it to its reserve account. Remember, it is working capital loan. Section 41 is applicable. Section 41 is applicable. So it should be treated as income. The company contributed 50,000 to electoral trust. Now it's no more there. Previously it was there. It is disallowed and allowed under 80 GGB. Company had invested in equipment for the purchase of approved research program to the extent of 18 lakhs and the same is considered as asset in the books. No in-house research equipment is allowed. Whereas company has also invested in land, not allowed, building allowed. The opening WDV as per income tax law, company purchased the new plant and machinery in September and December, immediately putting it into use, and an old machinery was sold. Depreciation for all other assets amounted to 14 lakhs. Read through the question. It's a very good question, lot of understandings. No, okay. Yeah, let's.
we have to compute the depreciation considering
Yes, sir.
the
Yes.
whole tax.
Yes, sir. Yes. Rule 6DD, which provides for disallowance under 40A subsection 3, specifies that where an employee is posted outside the base location for a temporary period, then any payment made otherwise than by approved modes will be allowed.
The research data has been
Sorry.
18 lakhs has been considered as an asset.
Yeah, I'll
Means
come
we
to
have 100%.
yeah, I'll come to that. I'll come to Yes, sir. 100% allowance.
You have reduced the block, meaning for less than 180 or greater than 180, additions are the correct.
That is, there are two assumptions. One, it is included in the addition. Two, actually, if I remember right, it is not included in the addition. That they put it separately, that plant and machinery. This is an equipment which has been taken as an asset in the books of account, which they allowed it separately. leaving 2-3 lines, I come to the working note. Normal depreciation, friends, 11 crores into 7.5% plus 30.82 crores minus 11 crores into 15%. Repeating, 11 crores used for less than 180 days plus this minus this into 15%. May I? May I?
So can we also please get access to recordings of the lectures?
Yes, you can contact the admin for that. There is a small encryption cost you need to pay for that, and you can get the access to the recording.
Sure. Thank you, sir.
But give me, it's not about the cost, but give me another 5 classes. You don't need the recording. I will make it sit in your mind. I mean, that's my opinion. Not.
Can show the depreciation.
Can I? Can I, friends? Can I? Let me go into again. I think this should be the last question. Okay. Again, one of the finest questions. These questions, after this, you need not work out. If you refer this, you will get the confidence of taking it. Only I ask you to understand, refer it. Okay. This question is one of the finest questions, especially for understanding depreciation. Okay. Almost all questions which I am working are past exam questions. Might be I'm not having the habit of putting it within bracket. This is asked in, because in income tax law that you cannot put that. I cannot reproduce the same question in income tax law. I need to make the amendments, and according to amendments, I need to do the question. That's why. The net profit of Messrs. Dilip Industries Limited engaged in the manufacture of iron and steel after debiting of the crediting of following items is 10 crores. Amounts debited. Depreciation as per book. The company has paid 50 lakhs on, please as of now highlight the date. Those who have the physical material, I'll come to it. Wait. On 1st August, a research institution recognized which has its object of research. The company has provided 8% interest at the rate of 8% on 350 lakhs being the amount borrowed from NBFC on 1st May 24 for purchase of machinery. The interest was outstanding, which was paid on 1/11/25. Okay. Okay. I understand that immediately our mind rushes to 43B, but I have something very important for purchase of machinery. So there is a borrowing cost for which 43B is not applicable. 43B is for expenditure debited to P&L. So let's wait. Salary of 1 crore is paid to foreign technician for installation of machinery without deducting tax at source. This is not allowed, but it should be added to the cost of the asset. There 40A is not applicable. There 40A is not applicable. General expenses incurred towards bringing drinking water to the village which the factory is situated. I appreciate you, but I cannot give deduction. Donation given to a political party not allowed, 37(2)(b). The company has incurred, sorry friends, I should have removed this adjustment. This has gone, this is, kindly remove this adjustment. The company has made a sales of 20 lakhs to Messrs. A and Company Engineers, a sole proprietor, in the financial year 23. In the financial year 23-24, 10 lakhs was written off as bad debt. Due to the demise of the sole proprietor, the company can only collect 7 lakhs towards final settlement in this year. The amount recovered was shown as bad debts recovered. 20 lakhs sale value, 10 lakhs already written off. So, another 10 lakhs is there as balance. I recovered 7 lakhs. It should be adjusted with the balance and not as bad debts recovered. And another 3 lakhs, as he was saying, another 3 lakhs can be written off. Has to be written off. Written down value, factory building, computers and accessories, office appliances, tractor used for the movement of raw material, finished goods within the factory premise. Remember, I know it's opening WDB. Additional depreciation can be claimed for this. It is a plant. It is used directly, or it is the opening balance. Later it will come. Plant and machinery. Additions, factory building, computers, tractors. Purchased on 1/8 but put to use only on 1/2. Plant and machinery. Plant and machinery, 5 crores installed on what date, friends?
1/2, sir.
1st February 25. I have obtained a loan on 1st May 24 for purchase of machinery. 350 lakhs at 8%. 1st May to 31st January. It should be capitalized. Borrowing cost. Borrowing cost should be capitalized. Am I clear? Am I clear? Once more shall we repeat in the classroom? ICDS 1, accounting policies. 2, inventories. 3, contract cost. 4, revenue recognition. 5, securities. Fixed assets. Okay. 6, foreign exchange transaction. 7, subsidies, that is government grants. 8, securities. 9, borrowing cost. 10, contingencies. Okay. So ICDS 9 says borrowing cost till the date of usage should be capitalized. I have started put the asset into use on 1st February 25. So 350 lakhs into 8% into number of months. For the month of Feb and March, it is a revenue expenditure. 43B will become applicable because he has not paid it within the due date. Okay, okay. I'll again work out and show. Okay. Expenditure towards ISO 9000 certificate 10 lakhs, intangible assets 25%. The recognition granted to the research association was subsequently withdrawn by the government on 28th Feb 25. Will it affect my claim? I asked you to highlight the date of contribution. It is 1st of August, am I right? 1st of August. It has been contributed. On that date, it is a recognized institution. Subsequent withdrawal will nowhere affect the recognition. So allow. You are required to compute the total income ignoring MAT or 115BAA because they are specifically saying compute additional depreciation and scientific research contribution is allowed. Read it once. Very well drafted question. The main answer is a very shorter answer. Main answer is a very shorter answer. Depreciation. So if there is a 14 marks, 7 marks is for depreciation computation. Let's start with depreciation working note. Let's start with depreciation working note. One by one, I'm taking up the working note. Treatment of borrowing cost. Total borrowing cost 350 lakhs into what is the rate? 8% into 11 by 12, that is from 1st May to 31st March. This is the total borrowing cost. Borrowing cost to be capitalized according to ICDS 9, borrowing cost till the date of putting the asset into use needs to be capitalized. Okay, so 1st May to 31st Jan, which is 9 months. Am I clear? 25, 66, 667 divided by 11 into 9. This is for 11 months. How much is for 9 months? Okay. First three assets, I'll take it as factory building, computers, accessories. First, for these three assets, I am going to work out. Shall I? Friends, 3 crores into 5% plus 15 minus 3 into 10%. Here directly 40%. Here directly 15%. normal depreciation, 10 lakhs into 7.5% plus 30 minus 10 into 15%. 6,21,000 into 7.5% plus 1421 minus 621 into 15%. This into 25%. Additionally, 10 lakhs into 10%, 6 crore 21 lakhs into 10%. Finest questions on depreciation. Okay. I'll write a couple of notes which are also forming part. May I? Contribution to a research institution will be allowed as at the time of contribution it was a approved research institution. The approval was withdrawn subsequent to contribution. Hence, it will not affect the claim of expenditure. So you will not disallow it. It at the time of contribution, it is an approved research institution. So you will allow it. Can I? Borrowing cost to be capitalized. Interest not allowed under section 43B. Installation cost to be capitalized.
Borrowing cost capitalized 21 lakh. Interest disallowed under 43 before 4 months. They have already debited the entire 25 lakhs and taken the PF.
Yeah, I have disallowed it. The entire 25 lakh 66 667 is disallowed under two provisions. One under borrowing cost, another under 43B.
Can you please scroll up to the
To that,
depreciation?
it will be three classes like this where you will write a lot. But I am sure it will help you. I am sure it will help you. Three classes, apart from today's class, two other class where I will make your fingers tired. But all these things is for a purpose. It's a single line purpose of the exemption. Okay, friends? Okay. The next question is a homework question. Okay. The next question is a homework question. one adjustments I will make you understand. See, both the employees and employers' contribution of PF 2 lakhs of March was deposited in July 25. Remember, employers' contribution is allowed. Employees' contribution should be treated as income. Employers' contribution allowed. Employees' contribution will be treated as income because it should have been deposited before the due date of respective law. Okay. And other things, I wish that I correct you after you make the mistake. Okay. After you make the mistake. Okay. I again request you to be little serious in homework sending. Okay. Yesterday's homework answers, for those who want to note down or take a picture of it, this is question number 25. Take a photo of it or make a note of it. For those who have sent me the homework answer, I have sent it already. This is question number 25. Okay. This is question number 27, part 1. Part 1 this is, and part 2 along with the final answer. This is question number 30. Am I clear? Am I clear? Okay. We are taking a quick 10-minute break now itself. We have completed with PGBP. We will, in the sense I have put a comma for PGBP, it's going to continue. We'll meet in capital gains in some time.